Rappelle qu'il faut aimer et rire.
Om at kæmpe for det, vi tror på.
History was not made by those who did nothing.
Une innovation qui allait changer les vies.
Right, now, come on. It's not about the language. It's about the spirit.
Great stories unite us.
Una grande storia può giungere da qualsiasi luogo. Una grande storia può giungere da
Trata de recordar lo que pasó.
¿Dónde estabas entonces cuando tanto te necesité? Nadie es mejor que nadie, pero tú creíste vencer. Señor, ante tu puerta de nada sirvió. Barras de bar, vertederos de amor. Os enseñé mi trocito peor, retales de mi vida, fotos a contraluz. Siento hoy como un halcón herido por las flechas de la incertidumbre. Entonces, no tanto te necesité. Nadie es mejor que nadie, pero tú creíste vencer. Si ahora ante tu puerta de nada sirvió. Varas de bar, vertederos de amor. Os enseñé mi trocito peor, detalles de mi vida, fotos a contraluz. Siendo hoy como un halcón herido por las flechas de la incertidumbre. Cuéntame cómo te ha ido en tu viajar por ese mundo de amor. Volverás, dije algún día, nada tenía y tú te fuiste de mí. Háblame de lo que has encontrado en tu largo caminar. Cuéntame cómo te ha ido, si has conocido la felicidad. Cuéntame cómo te ha ido, si has conocido la felicidad. Corto el pelo una y otra vez. Me quiero defender, dame mi alma y déjame en paz. Quiero intentar no volver a caer. Pequeñas Thank you. Good morning. Don't drink coffee, I take tea, my dear. Like my toaststone on one side. You can hear it in my accent when I talk. I'm an Englishman in New York. See me walking down Fifth Avenue. Walking in here at my side. Take it everywhere I walk. I'm an Englishman in New York. Whoa, I'm an alien. I'm a little alien. I'm an Englishman in New York. Whoa, I'm an alien. I'm a little the hero of the day. This a man to suffer ignorance and smile. Be yourself, no matter what they say. Oh, I'm an alien. I'm a little alien. I'm an Englishman in New York. Oh, I'm an alien. I'm a little alien. I'm an Englishman in New York. My street property can lead to notoriety. You could never ask the only one. Gentleness so bright around this society that it covers rain in the sun. More than combat here to make a man. Takes more than a license for a gun. Confront your enemies, avoid them when you can. A gentleman would walk but never run. If manners make it man, as someone said. And he's the hero of the day. It's a man to suffer ignorance and smile. Be yourself, no matter what they say. Be yourself, no matter what they say. Be yourself, no matter what they say. Whoa, I'm an alien. I'm a little alien. I'm an Englishman in New York. Whoa, I'm an alien. I'm a little alien. I'm an Gracias. Thank you.
Hello, Madrid. Hello, good morning. Hello, everyone. Good morning and welcome to South Summit 2019, Day 2. How are you? Good. Who's here? Who was here yesterday? Woo! And you're here this morning. Well done, guys. Who went to a party last night? Oh, much less. We're getting older. Well done for you. I'll see you next week, by the way. So, we have a morning, my God, I'm already exhausted. 12 slots non-stop. 12 slots. We're going to talk about growing, crowdfunding, banking, exits, IPOs. We're going to talk about mobility. We're going to talk about, well, we're going to even have magic. Would you like to see some magic? We'll have some later. And we're going to talk about how to make babies in the 21st century. Can you believe that? Do you know how to make babies? Okay, I don't think I need the details. Anyway, before I introduce our first speaker, who's going to actually talk about how to make babies in the 21st century. My name is Helena, or Elena. It's a pleasure. Hi, Jeff. It's a pleasure to be here and be your MC on this beautiful arena stage this morning. Our first speaker, we're starting with a bang, is the top level serial entrepreneur. He doesn't need a presentation, or barely does, but oh, I'm back? Yes. Just for the pleasure of introducing. Wait a second. It is me, obviously. Are we okay there? Yeah. We got all nervous because he's coming. Can I sit down? Okay. Coming? Hello, yes. Which one is working? This one? You want me to use this one? Yeah, okay. Saying he barely needs a presentation because everybody here knows him, okay? Who doesn't know Martin Barsarski? There's nobody there. Okay, everybody. About that? Yeah? Hello. Whoa. Here we are. We're back. How are you, Madrid? Thank you. Thank you. I was saying we have a fantastic first keynote speaker to start the day. He barely needs a presentation because he is a successful serial entrepreneur. 7 companies in the last 20 years and counting. He's not only an entrepreneur, he's also a teacher, a mentor, a business angel, he's a writer, and he always speaks his mind. Ouch. And he really believes and says what he thinks. He's here to talk about babies, but he was also mentioned, well, he's a visionary. He was described by Forbes as a young, rich, and restless person, and that was in 1999. Well, today, in 2019, he's still very young, he's probably much richer, and he's a restless father of 7. So apparently 7 is his magic number, 7 companies, 7 children. And he's here because he believes that everybody should have babies when they are ready and use technological innovation to help them to do that. So he's here to tell us about it. Do you want to hear it? Yes! Please, let's welcome Martin Barsarski.
Good morning, everyone. So I'm here to teach you how to make a baby, right? And which I have made 7. I think I would dare to say that nobody in this auditorium has more children. I have a hard time finding people who have more children. But I have made thousands of babies at my company, right? Because Prelude Fertility is the largest chain of fertility clinics in the United States. We're also building another company here in Spain and in Cambridge that makes a robot that makes babies, okay? And I think you're probably trying to figure out now how does this robot make babies? I'm going to leave you with that thought for a while. So why are we helping people make babies with technology? And the answer is because the baby boomers, the people who had the most babies, the people who had babies in the 1950s or so, didn't have much of a problem to make babies because they made babies in their 20s. They made babies in their teens and 20s. And human beings are biologically programmed to have babies in their teens and 20s. That's why there's so many issues with teenage pregnancy. You know, they kiss and they make a baby, right? But people who want to make babies now want to make babies between 30 and 45. And when you systematically want to make babies between 30 and 45, you fail a third of the times over your life, okay? It is incredible how frequently people fail at making babies because they make them when it's biologically too late, right? Last year in the United States, and in Europe it's even worse, by the way, 20% of women who turned 45 had no babies, and another 22% only had 1. But these same women, when they were asked how many babies they wanted to have, they said they wanted to have between 2 and 3 when they were in their 20s. So here's this group of women that wanted to have between 2 and 3 babies, and ended up almost half of them had no babies or 1 baby, right? And the problem here is a problem also of information. Like, occasionally a woman who's 45 with no help has a baby, and therefore everyone else thinks it's easy. I only need to train, I only need to be fit, I only need to be healthy. But unfortunately, having babies has nothing to do with those things. You cannot train to have a baby. It's a question of the obsolescence of the eggs. An egg of a 25-year-old woman is worth maybe 2 eggs of a 30-year-old woman, is worth maybe 4 eggs of a 35-year-old woman, and it's worth maybe 10 eggs of a 40-year-old woman, and it's worth maybe 20 eggs of 42, 43, and then it becomes really difficult. And it's not that people have no babies. Like in Spain, for example, in the 70s, there were a 35-year-old woman would have on average 3 babies, and now a Spanish woman has only 1 at 35 on average. Another thing that is shocking, though, and will surprise anyone in Spain, is that Spain is the country in the world that has the most IVF treatments in comparison to its population. In America, there's 200,000 IVF cycles for 330 million people, and in Spain, there's 110,000 cycles for 45 million people. So in Spain, there's a hugely developed IVF industry because people in Spain have one of the lowest birth rates in the world, and they have babies the latest in the world. People want to have like marcha, they want to have a great time, and they want to extend their years of being single, but then they have real problems having babies. So what can you do about this? How can you make babies reliably in 2019, in 2020, in the next 10 years? And the answer is using technology. So what technology is available to make babies? Well, the first one is egg freezing, right? Egg freezing is a technology that works quite well. I mean, it's not a guarantee. You could freeze your eggs and then maybe you're not able to have a baby. But if you don't freeze your eggs, then it's much less likely that you will have a baby, let's say, between 35 and 45. So freezing eggs is not as easy as freezing sperm. Freezing sperm, with the help of an iPad, maybe it takes 10 minutes. Maybe it takes 3, maybe 1, I don't know. Freezing eggs takes 2 weeks, okay? And it's not easy. But my wife, who froze her eggs, and we had 3 babies using IVF, when she was asked how hard is it to freeze eggs, she said, well, what do you want to compare to, a bikini wax? And, I mean, women do a lot of things that are painful. She said that was something comparable to a bikini wax. And also she said that compared to what comes afterwards, because of course you freeze eggs, but then there's the pregnancy and then there's the birth, that compared to birth, certainly freezing eggs is a piece of cake. The question is, you say, well, why should you compare it to giving birth? Well, because you're comparing to what the eggs are for. They are for freezing eggs. And so the whole idea here is that egg freezing works and egg freezing prevents infertility. It's a statistical game, and that's very difficult to understand. People are still wondering how Trump, with only 10% chance, he won the US election. And the answer is, well, he didn't really win the popular vote. He got 3 million less votes. But because of the system in the United States, he won, because things that have a 10% chance of happening sometimes happen. So yes, you will find women in their 40s who can have babies without problem, for sure. But it is a small group of women who can achieve that. And the question is, what is the reliability that you want when you start a family? Like, we don't take planes that crash 30% of the time. We don't drive cars that fail 30% of the time. But we fail 30% of the time at having babies, okay? And that's pretty sad, okay? Now, the other issue that I wanted to talk to you about is about this company. So Prelude Fertility, as I said, the largest chain of clinics in the US. We make thousands of babies. People come and they do egg freezing and IVF with us. But what about Overture? What is my other fertility company? How can you have a robot that makes babies? Okay, what is this concept of a robot that makes babies? Well, right now, babies are made by hand, and I don't mean making babies having sex. I mean an embryologist who picks up sperm and sticks it into an egg, and that's called ICSI. And they make babies by hand. The whole embryology lab right now, if you go to any embryology lab in Spain, which, by the way, they're producing an incredible amount of babies. Like, if you went to a kindergarten in Madrid today, 1 child in 10 will have been made in a lab, okay? It is extremely common to make babies in labs. I even heard of a clinic in Spain that organizes tours, so when kids at 12, they are taught sex education and how babies are made, they go to an IVF clinic because so many babies are made in IVF clinics, right? By the way, my daughter Hussein, she asked me how babies are made, and I didn't even have to tell her about sex. You know, I told her about a lab, right? which is actually, for children, it's interesting, but when they're little, it's easier for them to talk about the lab than to actually talk about sex, especially when they're something like 8, right? And so what is this robot that makes embryos? Like, how do you have a robot that makes embryos? Well, we have a team here in Madrid working on this, in Cambridge, UK, and in Madrid. What we're doing is we're automating the embryology lab. So instead of having a lab that's maybe 300 square meters with many different people and station to station, when you collect the sperm and you get the eggs, which come in the form of follicular fluid, which is like 100 milliliters of follicular fluid, and you have to find the eggs there, you have to singulate them, you have to incubate them, you have to inseminate them, you have to cultivate them, you have to genetically test them. Instead of doing all these things by hand, what we are doing is we are working on robotizing, on automating the whole embryology lab. So you start with sperm and eggs, you put them in this machine, and 6 days later you get genetically tested frozen embryos. I'm going to ask one thing. Where's the timer that tells me how much time do I have? Okay, thank you. Well, quite a bit of time. That's good. Because I wanted to explain more about how genetic testing of embryos works. So the question here is, people say, oh, I just want a baby, I just want a baby. And it's true, people want a baby. But the truth, the real truth, is people want healthy babies. There's a lot of illness that kill babies. Well, there's a lot of illnesses that result in spontaneous abortions. But then there's a lot of illnesses that result in death of children, right? Young children. And there's 2 types of illnesses along these lines. Some are called Mendelian illnesses, and they're illnesses that have monogenic causes. It is, you just identify one gene, and you can predict whether the child will have thalassemia, sickle cell anemia, cystic fibrosis, and many others. And there's other illnesses that are more complex and that have a lot of genes that are involved in the creation of this illness. For example, it is believed that severe mental illness has genetic origins, but billions have been found trying to understand severe mental illness, and it hasn't been possible. So the question is, when you have a machine that makes human embryos, can you also make healthy babies or increase the probability of having healthy babies? Because again, this is always a game of probabilities, and there will always be things you do not catch. So our last child, Ben, he's 2.5. You can imagine with me having 7 children, when I was going to have my 7th child, I was really concerned about the health of my last child. I don't know if you ever heard the expression that you're only as happy as your saddest child, right? But I think when you have a child with a serious illness or a child that may die during childhood, it's a pretty sorry state of affairs for you as a parent. Like, you become obsessed with whatever may happen to this child because you tend to focus on the child with the most problems. So the question is, does genetic testing make sense? And I have a lot of people who say, are you making designer babies? Well, the answer is we're not making good-looking, taller babies. We're not making smarter babies. We're just making babies that are very unlikely to have a set of diseases, maybe 1,000 illnesses, that are pretty bad. And I think that while some of you in this audience may oppose IVF altogether, and some of you may oppose genetic testing of embryos, I don't know if you're aware of this, but the most common testing now is not done on embryos. It's done on women who are pregnant of 4 months. And then they do certain type of genetic testing, amnios or other type of genetic testing, and then they abort. And that is sad. It's sad when you very much wanted to have a child, and you're 4 months into the pregnancy. So the alternative of genetically testing embryos, it is certainly better than aborting way into the pregnancy. I want you to think of this before you become negative on genetically testing embryos. Of course, there's what Prelude offers and what Overture offers is a choice. Like, nobody has to do this. And I completely understand people who, for religious objections, may not want to have any of these, may not want to do IVF, may not... I've had people who have criticized me for religious reasons, but I have people who have told me, religious people, who have said that Prelude and Overture actually do God's work, okay? I guess I'm somewhere in between. I'm not a religious person myself. In any case, if I was, I would be Jewish, and interestingly, in the Jewish religion, there's not this understanding that a person is a person at conception. A person is believed to be a person after birth, which kind of makes sense to me. But in any case, the genetic testing of embryos is something that is one of the great advances of society because of the social grief, the emotional cost of severe illnesses in babies, and because of the economic cost. In the US, it costs around $1 million per baby that's born with a severe genetic illness. So, and genetic illnesses are only 2% of pediatric illnesses, but they are 22% of the total cost of pediatric care. So there's economic incentive, and there's a social incentive, and there's an emotional incentive to test embryos. And our natural life, our machine that will make embryos, will not only make embryos, but it will also test embryos. So to summarize, you thought I was going to talk about sex, and I completely disappointed you. I ended up talking about robots and machines. This is not a conversation against sex. Sex is great. It's just not great to make babies in your 30s and 40s. Thank you.
Well. It wasn't disappointing at all, despite Martin not talking about classical sex. What an amazing story, yeah? What about the women in the room? How many women in the room? Woo! I love that sentence of women. We do so many painful things. This is just another one. Welcome, women. Women power. All right, we're going to go from making babies to crowdfunding. You know, the typical. Here we go. Recently, a number of notable tech companies have completed huge crowdfunding raises by encouraging their customers to invest in them. And I wonder, why have they chosen this route, and what do they see as the benefits of having thousands of small investors? Do you wonder the same thing? I'm glad you do. We are too. To do that and to give us all the answers, we have a fantastic panel. Let me introduce them all, and then we'll give them a round of applause at the end. We have Darren Westlake, the CEO at Crowdcube, Guillermo Vicandi, co-founder at Bnext, Rob Moffat, partner at Balderton Capital, and to moderate, the great Charlie Hammond, strategic partnership at Curve. Let's welcome them all. Hello. Hey, welcome. Darren. Welcome, guys. Welcome, welcome.
Thank you very much, Helena. So good morning, ladies and gentlemen, and welcome to the second session here at South Summit. As you've seen, the title of this session is Crowdfunding 2.0, the power of having your customers as shareholders. And we're going to explore this morning the evolution of crowdfunding, and the benefits of crowdfunding beyond just raising capital. So we'll get onto that in just a second, but first of all, we should probably introduce ourselves. Perhaps if I go first, and then we can run through the panel here. So my name is Darren Westlake. I'm the CEO and co-founder of a company called Crowdcube. We are one of the largest equity-based crowdfunding platforms in the world. We're based in the UK, based in London and Exeter. We also have an operation here in Spain, based out of Barcelona. That's me. Carlos, do you want to start off?
So I'm Carlos Silva. I'm co-founder of Seedrs, the other one of the largest companies in Europe. Let's not get into discussion.
Yeah, exactly. Yeah.
So we launched in the UK. We're operating Europe-wide.
So I'm Rob. I'm one of the partners with Balderton Capital. Some research recently showed that we're the most active Series A investor in tech in Europe. And that is our focus, 100% on European founders building great global businesses, and 100% on technology. I personally focus on fintech and insurance. I've been doing that for 10 years. In fintech, we're investors in Crowdcube. We're also investors in companies like Revolut, Comply Advantage, Zego, and others, Nutmeg. And I'm also on the board of CarWow, who are currently raising on Crowdcube.
Mm-hmm. So my name is Guillermo Vicandi. I am CEO and co-founder of Bnext. Bnext is the leading Spanish neobank. We launched only 18 months ago, and we now have somewhere around 300,000 active customers here. The first fundraise that we did in Crowdcube, a very small round back then, but to get our business started. And now, like I said, we're leading here in Spain, and we're headed to try and lead in Latin America as well.
Cool. I'm Charlie. I work for a fintech platform called Curve. We're a London-based firm. Just closed our Series B. On the back of that, we did a crowdfunding round with Crowdcube.
Great, thanks, guys. So we've noticed a trend recently, probably over the last year or so, in the crowdfunding industry, whereby companies are coming to raise money on our platforms, but they're not. The main purpose of their raise is not to raise money. It's not about the capital growth. It's about other benefits of crowdfunding beyond just the capital. And I guess one of the most prominent companies that we've seen do that is a company called Monzo, which you guys might be aware of. They're basically a challenger bank in the UK. They pretty much do a similar model to Bnext in the UK, growing very, very quickly. And last year, they did a Series E round, which was a very large round. They raised £100 million or so, of which £80 million came from institutional investors, principally from Accel and another big VC in the US. But also, they carved out 20 million of that round, and they just decided to raise 20 million from the crowd. And the crowd in particular, the people they were targeting, was their existing customers. So they wanted their customers to become investors. And that went incredibly well. So they raised £20 million, as they planned to, in just 3 hours from 36,000 investors, 36,000 of their customers. So there's been this big shift in the way that companies are using equity crowdfunding. So it'd be good to talk about that a little bit more and get people's views on why companies like Monzo are doing that. Rob, I guess you follow the industry pretty closely. I'd be interested in your thoughts on why Monzo did that and what the benefits they saw of doing it.
So I think you go back to sort of why we invested in Crowdcube in the first place and why we think this whole sector is interesting is exactly that. Obviously, crowdfunding in a way is a threat to venture capital. It's a different way of funding businesses. It doesn't involve VCs, which that was how it was perceived, I think, by some people, sort of say 5-7 years ago. And I think what we've realized over time is very much a compliment. The businesses, they want to get a established name on board, someone like a Balderton to do the due diligence, to provide that validation. They think this is a great opportunity. But then they can also add a huge chunk of money from the crowd, and they can get their customers really engaged in the business. And we like this circularity that you have a business like CarWow comes on Crowdcube. They get their customers onto Crowdcube, so anyone who's bought a car on CarWow is like, oh yeah, this is a good idea, this is a good business, I'd love to invest. And that gets them onto Crowdcube. Then they might invest in another 10 businesses on Crowdcube. Equally, you have existing Crowdcube investors who invested in Monzo are looking for more opportunities, they're investing in CarWow. So you get this really beneficial virtuous circle of getting people to really engage with their companies. So that's what we love about the crowdfunding model.
Cool. And Guillermo, what did you make of the Monzo raise? I guess you in particular were following it really closely.
So look, in our particular case, when we decided to do the crowdfunding, it was pretty simple, the decision. It was just a matter of, we do need the money, of course, to get the business running, but what we really need is a client base that are the most loyal ambassadors that we can get, right? Because we're going to build our business on top of those guys, right? Yeah. So we did a 300,000 raise, so of course nothing compared to the guys in Monzo or to what these guys just did. But for us, it was very relevant because we got somewhere around 70 investors that still to date are one of the most active guys that we have in our community. They are one of our most loyal ambassadors. And when you track who are the customers that have brought more customers to the platform, have referred the app more, you'll still find a lot of the investors from the early crowdfunding campaigns that we did in that list, right? And I believe that the guys this is as valid for a very early Series seed round like we did. It's as valid for a Series B or C or later on, right? You want to sort of thank the customer base that you have got that have helped you put the company where it is. You want to thank them, sort of sharing your success with them somehow, right? So I think it's a way of getting more engagement, getting more ambassadors, and at the same time sort of thanking the guys that have helped you get where you are today, right?
Yeah, definitely, yeah. And you were telling me backstage about what's important to your business at the moment is that customer engagement, but also the word of mouth and the referral from customer to customer. And the way that you acquire new customers, right?
Absolutely. So for us, it's somewhere around 70% of the customers that we acquire come either organically and by referral. And what's interesting is that this number is not now that we've got a big client base that's happening that way, but rather from the very beginning we've seen that sort of virality, if you wish, right?
Yeah.
And I'm pretty sure that a part of that is because the customers were our investors. Our first customers were also our first investors, so they were very active in the community, very actively inviting others, very actively collaborating with us in building the app as they wanted it. So I think that we were able to get very relevant feedback on what our clients are looking for, and we built the app on top of that, right?
Yeah,
and it's still working to date.
Yeah, I mean, we had some of the stats that Monzo came out with from the results of their raise, and two were really interesting and relevant to what you're talking about. The first one was they said that the people who are customers and also investors are 43% more active on their app than other people. And also, they are 3 times more likely to refer somebody to use it and to become a new member. So they're really strong metrics that have come out of it. Carlos, any comments on kind of Monzo and any of the big raises that you've done on Seedrs that have kind of done it for more than just money?
No, I agree. I think that a lot of the value of equity crowdfunding comes not from money, but it comes from the other things that are involved in around, like you were talking about competition between VCs and equity crowdfunding in a way. And if you look at only the monetary part of it, VCs also compete directly with other VCs and other forms of financing. But at the end of the day, the reason why you involve multiple VCs in a round is because you get the best of each VC to help you with specific things. The same with equity crowdfunding. Like you're getting the upside of equity crowdfunding for specific things alongside the VCs. So for instance, as you mentioned, the connection with the client base is absolutely key to an equity crowdfunding raise. So, for instance, when we had Chapel Down, which is a listed company, raise money through us, why would a listed company raise money through equity crowdfunding? They could raise directly through the stock market. Well, the reason is precisely because they wanted a bigger connection with their client base. They're one of the largest wine producers in the UK. And the fact that they had such a large amount of people investing in them through an equity crowdfunding campaign created a really close connection, not only with the brand, but also with the vineyards. They go on tours and stuff like that, and that's a very close connection. Revolut is another great example, similar to Curve and Monzo. So they did a 60 million round a while ago, and they carved out about a 5 million to raise through us. And it was not because they needed the money, because they were oversubscribed. It was because they wanted the connection with their client base. And I think that's absolutely key when we're talking about equity crowdfunding.
Yeah, absolutely, yeah. And Charlie, you've just done an amazing raise with Curve. You were telling me some of the stats that you achieved when you did the raise a little bit earlier. It'd be great if you could share the whole experience of why Curve did the raise, why they chose to raise money this way, and the success that you have, and how you did it, because you managed the campaign, and you were the guy behind doing it, right?
Yeah, so I actually previously worked at Crowdcube before joining Curve, so naturally it was a logical step for us. So yeah, as I said, we closed our Series B in June this year. And kind of...
But not any Series B, just tell how much you raised, man.
Oh, we raised 6 million quid through Crowdcube in 4.5 hours. So I think we averaged 360 quid of investment per second over that time frame. We had 29,000 people register interest before going live. It can be quite difficult to kind of project how things are going to go, but we knew there would be significant interest when we had those numbers come back through. So yeah, it was definitely a huge success for us. We ended up with 9,500 investors, which are now going to be our brand evangelists and have a vested interest in the business's success. So they'll be kind of out in the streets promoting our product and, yeah, pushing us forward. So it's huge for us.
Great. And can anybody tell me any other benefits that they've seen companies get from having crowd investors? I mean, I've got a few examples that we've seen at Crowdcube, for instance. Product engagement from Monzo. GoHenry, who did a large raise with Crowdcube, did it just for the number of downloads on their app to increase those. Referral we've talked about, so Chip and Monzo both did it for kind of those refer and that kind of customer acquisition. Also reduction in churn and kind of improved retention, Chip. Another really interesting one was a company called Freetrade that have done a number of raises with us now. And their CEO was telling me the other day about how they've managed to recruit a lot of their team. More than half of their team have come through their investor base. So they invested in the company, and then they reached out to their investor base when they were doing recruitment, and they've recruited people through their investor base, which is a really interesting thing to think about.
It's interesting when they're sort of blurring the lines between equity investing and crowd investing, right?
Yeah.
They're all about being a free trading app, and yet their customers also want to get pieces of private companies.
Yeah, exactly.
And I think that barrier starts to become a lot more fuzzy between an AIM-listed company or a sort of small market-listed company versus a Crowdcube or Seedrs company.
Yeah, that's right. So, Rob, you're on the board of CarWow. I'd love to hear the kind of conversation that went on, if you can disclose it at the board, when somebody proposed doing equity crowdfunding as part of the round, when obviously they could have, they've raised like 100 million in investment from institutions in the past. But it'd be great to hear that discussion that went on as to why you chose to do equity crowdfunding.
So, yeah, I mean, I've been pushing CarWow to do crowdfunding for a while. Obviously, I've got a slight bias, but I think for them it makes a lot of sense. So the reason is, the car buyers are generally an affluent population. They're very similar to the people who invest on Crowdcube and Seedrs. There should be high crossover of people, and that should make it a very effective crowdfunding raise. So something I pushed them to do a year or two ago. Their pushback at the time was crowdfunding works really well for anything involving alcohol, breweries, wineries, etc., or anything in fintech. And there's a lot of massive fintech raises. And they're like, we're a car marketplace. What's the precedent? And that, I think, was the nerves on their side, that there's a bit of work to do to make sure you've got a great presentation on Crowdcube to make sure that it works very well. And they were trying to say, okay, if we only end up with, 500 customers or 300 customers investing, that's not enough. And what we've been delighted with this raise so far is I think we have north of 5,000 people investing. We have, I think, 5 million euros invested so far, still going.
Amazing.
So really getting a significant number of users engaged, raising significant capital. Again, for CarWow, it's not about the money. They have us, Accel, Vitruvian, Mercedes-Benz, all those investors. They have plenty of money around the table. It's about that connection to the crowd.
And you mentioned the nervousness on board. Was that from the institutions, or was it from the kind of the management, or
more from the management, actually? Well, management and other VCs. I think there's a certain element of other VCs having to really accept there's actually a significant part of the funding environment, and it takes VCs a while to get that. We can be a bit slow, and then also from getting the management really engaged with it. It's an education process. I think it takes time. This is changing how you finance businesses is not something that happens very often, so it takes time to really change people's outlook.
Yeah, I had a question about that, actually, which was when we started Crowdcube, and I think, Carlos, when you started Seedrs around the same kind of time, VCs were really reluctant to invest in in companies and get behind crowdfunding. They were very skeptical about crowdfunding as a funding mechanism, full stop. And there was this kind of rumor that was going around amongst founders that if you got investment via crowdfunding, then no VC would ever invest in you. And I think in the UK that's changed enormously over the last kind of 5 or 6 years in particular. I'm not sure that perception has changed so much in other countries, and our head of Spain tells me it's less like that in Spain at the moment. But Carlos, did you experience that? And what do you think has kind of changed in VC's mindset since those early days that we experienced?
Yeah, for sure. I think that one of the main challenges that Seedrs had, and I'm sure you guys face the same challenge, was educating not only the entrepreneurs but also the institutional investors. As you said, the initial idea was they're direct competitors, they're going to be stealing our market. But I think that nowadays there's a lot more of cooperation rather than competition in this field. And as I said, VCs cooperate with one another. They share deals. They share deals because they want the skill sets of other investors around the table. And equity crowdfunding ends up falling into that equation as well as something else that brings a different kind of advantages to the table, a different kind of upside to the table. And I think that has changed a lot. In the UK, as you said, it's probably the more mature market in Europe on this front. Other markets are still lagging behind, but we can see the difference. We can see things are definitely changing. I don't know about the Spanish market in terms of this competition versus cooperation approach, but for instance, in Portugal, I think that has already changed quite a lot. Because of the fact that me being one of the co-founders of Seedrs and me being from Portugal, the education part has kind of moved a little bit faster, but it's still ongoing. I don't think we're still there yet, but it's certainly moving in the right direction, and I think there's both parts see a lot of value of having the other ones around the table as well.
Yeah, definitely, yeah.
And I gotta say, Darren, sorry to jump in here, but I think that at least in Spain, the advances in legislation that we're having, it helps crowdfunding a lot, right? Because you probably remember that what happened to us the first time that we did a crowd, it was like, what, maybe 2 years ago, 3 years ago? We needed to have all the investors directly to our cap table, you remember? And that's the problem, right? So then I go talk to Rob and I say, look, this is my cap table. And he says, but you've got 50 people here, right? What is this, right? So that downside blurs a bit the upside of having ambassadors and stuff, right? But as soon as we are able to put them in vehicles, to do it in a way that's easier to handle 35,000 or 9,000 investors, it's easier to handle, like operationally speaking, then you only see the upside of having 9,000 guys that love the brand and are going to recommend it, right? So I think that the advances that you guys in the UK are way ahead of the rest of continental Europe, but the advances that we're having here, at least in Spain, regulatory speaking, are also helping a lot to get crowdfunding as a
definitely. And part of that, as you mentioned, is due to having a nominee structure whereby your cap table is much simplified, and we offer that through Crowdcube Spain at the moment. But I think other platforms, because of regulation, are unable to offer that. But that is about to change because regulation across Europe is about to change as well.
Yeah. I think, to be honest, I think that's a major milestone for Europe. I think one of the big advantages of the UK, and one of the reasons, I don't know about you, but one of the reasons why we decided to start in the UK, it was not only because it was the most mature market in terms of entrepreneurship, but also because the regulatory regime was more adequate to what we're doing. In Europe, that's been very different, and it's been a lot more difficult for us to operate. The new European regulatory regime is not perfect, but it's certainly way ahead of what we had before, and I think that's going to open up Europe in a way that hasn't been done before.
It's going to make a huge difference, and it increases credibility as well in new markets, without a doubt. We saw that in the UK. So obviously, with raising money from such large amounts of people, how many people invested in Curve?
Just over 9,500.
So that's a lot of people. So I guess one of the obvious questions is, how do you then manage that investor base? That's a lot of people to manage and make sure that they are engaged. And how do you make the most out of that connection that you have with those people? Charlie, any ideas on that?
Yeah, well, we're still in our infancy of figuring that out, I guess. It's close to the round. But yeah, that can be something that people find intimidating when they're considering something like this. But for us, it's very much positive. We now have 9,500 people who are highly engaged with our product. So we'll be hiring a specific role to look after them. to engage with them and kind of help cater to their kind of their wants and their desires with the product and how we go forward. So we report on a quarterly basis to them. That's what we have planned. But more than that, we'll be doing specific community events to them to kind of engage them with our roadmap and keep them really in check with where the business is moving.
And do you plan to have any kind of physical events or anything like that? I think that the most famous is kind of Brewdog. If anybody's aware of Brewdog, I'm sure many of you are. They have crowdfunded themselves many, many times and I think they have 120,000 investors now in their company. And they have these massive AGMs which they hire out a football stadium for and have a lot of beers flowing, I think. But and then Monzo did something a little bit tamer than that last year.
Yeah.
Have you guys got anything like that planned?
Nothing in the works right now. Our investor base spreads across Europe as well, so we're probably looking to do more things like live events and live panels where we can kind of preload questions and make sure we're not just catering towards that UK segment of our investors.
Yeah.
But yeah, it's definitely something we'll be pushing forward.
Guillermo, you got any thoughts on plans on how you're going to manage? Because you're about to do another crowd fundraise in the next few weeks, I think, aren't you?
That's it. So we just recently closed our Series A that we did a...
Congratulations.
Congratulations. Thank you very much. And yeah, we're planning to do crowdfunding that's going to be live in 3 weeks from today. We're planning to beat some records, but having the guys who curve here, it's difficult.
Yeah.
But yeah, we'll keep everybody posted because we're planning to do that. The problem in trying to do live events, Darren, here in Spain is that you've got 9,000 investors in Spain and you invite them for beers and then 9,000 will show up, right? So that can be a problem. So we'd rather do that online, right?
Nice. Sure, very cool. Cool, I'm conscious of time. One last question to you all, perhaps. So what are your top tips for executing a successful campaign, and specifically for converting your community into shareholders? Perhaps we start with you, Charlie, who's done the best job of that so far, I think.
Yeah, I think probably the number one tip to remember is that communicating an investment proposition is very different to communicating your product. So you have to be careful that you're clear and put together a pitch that can kind of speak to a wide variance in your demographic. So we started very precisely with a short email introducing the idea of crowdfunding and explaining why we're doing it. And then as we went along in the process, spelt that out a little further. So I think the top tip would be to start small and then to build on that from there.
Mm-hmm. Great, thanks.
Yeah, I couldn't agree more. To me, it's key to be transparent, understand that the people that you're sending your message to are maybe not professional VCs, investors, so you really need to explain what you're doing, how you do it, how you're making money, what are your plans. It probably helps as well to build a successful crowdfunding campaign to do it alongside with relevant VCs, right? Because at some point, the crowd investors will see, well, we got the guys in Badgerton here, right? So it's probably, they have done their due diligence, right? So I can trust that.
Yeah, definitely.
And other than that, like Charlie said, just communicate it as transparently as possible so everybody understands what they're doing, and then keep track and keep them in the loop of what you're doing so they feel engaged and that the money that they put there is, it's bringing them additional value, not only the investment itself, no?
Yeah, definitely, I agree.
Yeah, I agree with both of those comments. I think, and the core of, I think, why people are investing on Crowdcube and Seedrs in the end is that they want to get a return. And that's something I love about the platforms, is you're getting people who are not massively wealthy people investing in companies and making some great returns. If you're the first investor in Monzo, in Brewdog, in Revolut, you're sitting on some great returns there.
Yeah.
And I think how you get that across to the investors is really important. I think you'll have to get them to love your product as well, and that's what they really care about. But I think in the end, the success stories and the evidence of great investments for people is what's really going to continue to build these platforms long term.
Yeah, because people won't come back unless they start to see those returns.
And this is getting people to, who are normal people, investing £100, 200 euros into companies. That's the start of them doing equity investing. And equity investing is a very smart thing for people to do in general.
Great. Carlos?
No, I agree. I think the first one is be prepared, prepare way in advance. I think one of the biggest mistakes that entrepreneurs do when they come to Seedrs, for instance, is they want to go live really quickly. That's usually a huge mistake. The most successful campaigns that we've had on the website are the ones that spend like 2-3 months just preparing for the campaign. The campaign should be the last thing and should be kind of straightforward if you've prepared well enough. Communicating is really key as well. Being good at communicating with the investors, communicating in an effective and ongoing way. And the last one, the returns end up being key as well. So making sure that there's a liquidity or possibility of a liquidity for the investors. So Cedars has a secondary market that helps them kind of sell their shares if needed. And I think that ends up being critical as well.
Yeah, good point. Well, it seems like our time's up, so it just remains for me to thank the panel. Thanks, Carlos, Rob, Guillermo, and Charlie. And thanks, guys, for listening.
Thank you. Very good. Let's go.
Cry, take a sad song and make it better. Everyone, remember to let it into your heart. That's when you start to make it better, 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 better. And at the end of today, we'll sing this again. Before we party, I ask you to come and join us on the arena stage to sing this song, okay? In the meantime, let me ask you, well, I'm going to give you half a sentence, and you have to give me the other half. Are you ready? Someone is ready in the third row. Excellent. Is everyone else ready? It's a very easy challenge. Are you willing? Yes. Okay. The sentence goes, when life gives you lemons, you make lemonade. That's right, isn't it? And why do I do this silly thing? Because there you have the title of our next chat. And why, you may wonder? Well, because we are going to interview the Chief Business Development Officer of Lemonade, which is the company that is completely disrupting the insurance sector, the insurance industry. And you may say, the insurance? No way. And I say, yes, believe it. I don't believe it. Insurance can be disrupted. Yes, and we're going to talk about it. And who's taking the challenge to interview this guy? Well, we have a partner at SoftBank, and they're going to give us all the secrets. So please, let's welcome Jorge Espinel and Javier Villamizar. Welcome. Welcome.
Gracias. Hola, Jorge.
Hola, Javier.
Thank you, Maria and the organization of South Summit for having us here. We're going to have a chat with one of SoftBank Group's portfolio companies, a company that is disrupting one of the most traditional and probably complicated industries around the world, the insurance space. Jorge comes to Lemonade from companies where he was very connected with consumer experiences. So he was at Time Warner, AOL, and most recently he was at Spotify. And this basically gives you an idea of what Lemonade is all about. It's not your traditional insurance company. It's not the company that is trying to sell you another policy that probably you don't need, but is a company that was built in order to provide, particularly new generations like everybody here, millennials, providing us with a way to protect our stuff, our things. The company has been in business for how long?
4 years.
4 years. Started in the US, have been growing, as you can imagine, because it's a complicated industry in the US. You have to go and develop this business state by state. Right now, they're present in how many states?
We're live in 28 states.
28, so still a lot of ground to cover. And the company has started to think about international expansion. This is something that we at SoftBank, every time that we invest in a company, we push the founders to think about. We believe that disruptive business models as Lemonade could have, global footprint. And we have done it with many companies in the portfolio, both at SoftBank Group level as well as the Vision Fund. Companies like Oyo, for example, that started in India and now is present in China, present in Europe, present in Latin America. Companies like Uber, many others that we have in the portfolio. We believe that a great way to accelerate growth is to go and redeploy or deploy these business models into new geographies. So you guys are coming into Europe now.
That's right.
So Jorge, tell us a little bit about how's that experience of living in the U.S., the commodity, the convenience of being in the U.S., doing business there, even though it's complicated because of the different, regulations, but now coming into a probably more difficult geography. How was the decision to come into Europe, and how has been the process to get set up?
Okay. Well, thank you for having us here. We launched about almost 6 weeks now in Germany. It's our first foray into Europe. The process was simple. We believe that there's an opportunity to create a global insurance brand that satisfies the consumer needs. And we believe that that's, by the way, is pretty unique because most insurance companies happen to be local and regional. So most of the big brands in the US don't travel to Europe and vice versa. But we feel that actually the needs of consumers, while they may vary culturally in certain aspects, they're pretty common, and that we can use the same infrastructure that we have in the US to build experiences globally. So we started in Germany, but we actually were licensed, we secure our license out of the Netherlands. It is the regulator there is both well respected and highly and supports innovation. And the way it actually works a little bit different in Europe is once you get licensed on one of the countries, you can passport in your business across the different countries in the European community. So we launched 6 weeks ago. We launched with 2 products. In Germany, it's called Contents, which is protect your stuff and liability. So if you cause harm to someone else, your insurance can cover that. And so far, so good.
So what is the differentiator? Why would you go as a consumer to Lemonade to buy insurance?
So the idea behind Lemonade was when you look at spending in general, insurance is usually the number 3 or number 4th category after housing and food. And we thought that there was no reason why there couldn't exist an insurance company that it should be loved. I mean, insurance is a need,
nobody likes their insurance.
But right now, it's totally unloved. No one likes their insurance companies, and we felt like, well, why is that? If it's something that is a great service, that it should help you. And that was the answer, is how do we make an insurance company that loves? And the answer was very simple. It's like, well, we'll design a company just for consumers. We'll design it built around what consumers want and need. And that starts from a different business model. So our business model doesn't have the traditional conflict of interest that you have with most insurance providers. So the business usually was established that the more claims I paid for you, the less profits I make. In this day and age, consumers don't really care whether your insurance company is doing well or not. They just care about, hey, I had a problem, I've been paying my insurance, I need my money, and I need it in a way that it's like, I need the money, I need the service, I need you to help me in my time of need. So we really have built an infrastructure, a business based on our business model, our systems, our technology, in which we actually focus not just on selling you the insurance, but actually on helping you when you're needed, both when you need customer service, as well as when you file your claims. And we use sophisticated artificial intelligence and machine learning to make the experience delightful. And how do we do that? We do things like 30% of our claims, for instance, are handled by our machines. And what that enables us to do is to
So when I go into the app, I'm not talking to a person?
No. Usually, it depends on what you're trying to do. But most of the functions, like 30% of the time, if you need customer service, like I need to add my spouse to the policy, that shouldn't require a call, right? If my house is on fire, then you need to talk to someone. So what we use is automation when it's needed and needing to help you make things simple. If your phone is stolen, for instance, we can put money back in your bank account in a matter of seconds. So when we pay claims, it's like 3 to 8 seconds, money's in the bank. And people just think like that experience is magical. But we have an ability to really understand when you file the claim, whether you're being truthful, whether you have the right level of coverage, and what happens to you. And so that is the focus, and I think what differentiates above all the activity I think that is out there is really that we are obsessed with the consumer and satisfying those consumer needs. And so that is a need that happens also in Germany, that it will happen in other European countries and around the world. We see it in Germany, we see it in the US, where there is that appetite, especially from the new generation of consumers who actually want to be, want to have products that are designed for them, products that can serve them, as opposed to necessarily serve the business itself.
So you're growing in geography, you're coming into Europe, you want to become a global brand. But right now you are focused on renters insurance, homeowner insurance, liability content. What is the opportunity into expanding into a broader insurance offering?
Yeah, I think we've always talked about these are entry points to build a relationship with the consumers. But we believe that there are probably other categories of insurance that are interesting from a consumer perspective. So probably initially we'll try to grow our 2 products, and frankly there is not only in terms of coverage, for instance, in the US, our homeowners product right now is really growing at a pretty good rate. So we'll focus on those products, but at the same time, we'll start exploring other products that are based on the needs of our customer base, on what we're seeing from them. And frankly, we see it even on social media that consumers said, I would love for Lemonade to have
pet insurance,
life insurance, auto insurance sometimes, and auto is hard though.
How do you, when you expand your business model to include other verticals in the insurance space, how do you make the decision of, I'm going to do this by myself, or I'm going to probably partner with somebody in the back to provide those services? How do you make that decision?
It's a combination of elements. I think when we think about this aspect, there are some things that we feel there is. So one of the big things is to be able to do all this, we actually need to be an insurance carrier, is the technical term. That means we need to carry the risk, so we're able to actually change the product itself. And in some cases, you may find the product available in the marketplace with someone who has the right sensibility and the right alignment, and probably we would partner as long as we are able to actually deploy the right level of service and customer interaction that we would like. In the cases that we don't, then we probably have to start from scratch.
So is the traditional insurer, like the Geico in the US or the Allianz in Europe, is your friend, is your enemy, is your partner? How is the relationship with them? Because you're disrupting the industry, but at the same time, there are places where you have to work with them.
Yeah, no, we think the market is big enough, so we're not necessarily have to work with them. I think the market is evolving, and there are opportunities to always, that may create opportunities to partner, depending on how each provider looks at their portfolio of assets. If they are in the business of selling renters and homeowners insurance, and then they are the insurance company behind it, then it's very difficult to partner with us. But if they're not, then that may create opportunities for us to do interesting stuff.
What has been the learning about kind of hacking growth at the company, trying to grow using digital marketing, using digital channels? What is kind of something that you guys have learned that works, particularly in this space?
I think is being close to the consumer. I think one of the things that I'm most impressed with how we develop our product is how much we're using our customer service interactions and our claims interactions to actually evolve the product and the platform. and the experiences to be able to understand what are the right points of automation, what are the points on how consumers may need to be served differently. And it is, we've designed it in a way that is almost, we're deploying features on the product on a daily basis. So it's really a product that is consistently evolving.
And you mentioned to me that even the customer service people that you have, people that is answering the phone, they become kind of providers of feedback to the product team in order to make it better.
That's right, yeah. So that we have channels open in which people are constantly sharing that feedback that the consumer is providing through those interactions, and understanding that there are some things in customer service that can be automated, and they're better automated, and it enables our people actually to have time to deal with some of the most complex interactions.
So you use one of our portfolio company solutions to do that? To communicate within the enterprise?
Yes, we're big fans of Slack.
Okay, great.
Fans of Slack.
So maybe to finish, again, you're part of the big SoftBank family. You're obviously one of the portfolio companies of the group. What has been the experience of being part of that group? What kind of, what value have you seen being part of that family that maybe is different from other investors in your cap table?
Yeah, we've had great investors, but I think it's the support that SoftBank has consistently provided to our company, particularly as we worked in a highly regulated environment, and where having a backer like SoftBank enabled us to actually demonstrate a certain degree of needed solvency, and have the right financial support to be able to do this. Because one of the most difficult things in going through a regulatory process is to be able to demonstrate that you are going to be around. Because the fear that the regulators have is, especially when you're dealing with a startup, is you may come and go, but they're going to stay here for years. That's why people don't dare to launch big insurance companies for many years. Most of the players in the US, for instance, and in Europe as well, they are over 70 years, and those are the young ones. I was at a launch yesterday, and all the folks sitting at the table were working for companies that are like 100 years old. So this is and having someone like SoftBank who's been really supportive of our business, of our plans, of expansion has made a tremendous difference. As well as, it's obviously, and you guys come with capabilities, so as we looked at expanding into new areas, new regions, you have capabilities that right now, given our size, we don't, and enable us to actually do a lot more than we can with the people that we have.
Great. So as you basically grow the business, you will need more capital. We were in a lunch yesterday with a few leaders of different industries, and one of the CEOs of a very important financial institution here in Spain said, I will never invest money on a startup in a regulated industry. And he was very adamant saying, I will stay away from that. And he was obviously talking about, ride sharing, mobility, things that have created a lot of noise, particularly in this country. How do you see the challenge of raising money in this specific space where clearly regulation is going to be there, is going to stay there forever?
Yeah, no, I think to us, we see it as an asset and a capability. Working within a regulatory environment is very difficult. But frankly, the founders, one of the great decisions I think that they made was to try to find a license out of New York City, which is the toughest regulator in the United States. Because they believe if we are able to actually make it in New York, we'll make it anywhere. And that kind of has proven true for the company. And now I feel that we actually have a muscle in our ability to work with regulators and work within the framework that is provided today, but in that context actually innovate. And I think that something that is interesting from a regulatory perspective is they do want to enable the consumer to have better experiences.
Sure.
And that has enabled us to actually be innovative and get the support of the regulators as we go state by state in the US, as well as in Europe.
Crack the code on a regulated environment, it also becomes a mode for protecting.
And we're happy to work with that within that framework. I think that actually makes the company have a unique capability because it is very difficult to build that muscle.
Great. Excellent. All right, thank you for the time. Thank you for the attention here. Keep enjoying this fantastic event, and appreciate the support, and we'll be available later on for questions from the audience. Thank you.
Thank you.
Woo. Thank you. Big round of applause to our band. They're fantastic. Ruben, Victor, Alex. There you go. I have so many men in my life. Can't remember all their names. So, wow. We actually love insurance. Who says we don't love insurance? That was a fantastic panel from Javier and Jorge, from Lemonade and SoftBank. But from insurance, we're going to jump into the banking sector. Because the banking industry has changed dramatically over the last years. Please raise your hands, the people that remembers the last time they walked into a bank branch to do some kind of get information or do something. You remember last time? I actually don't remember, but there's a couple. You remember last time. But do you remember the guys? I mean, some of you are so young, you have never been actually, probably never walked into a bank branch. You just do everything through the mobile, right? There's a lot that has changed, but still there's a lot that needs to be changed, isn't it? Because now banks are investing a lot in data analytics, digital technologies, but is it enough? Is it enough? Well, we have a keynote speaker that is going to answer these and other questions regarding the transformation of the banking industry. He is the global head of retail customer solutions at BBVA. He's a financial services executive with proven track record of developing digital solutions and improving customer experience. And he's responsible for developing digital solutions for customers across the BBVA group. Please, let's welcome Gonzalo Rodriguez.
Vale, perfecto.
All yours.
Thank you so much, Elena. It's a pleasure to be here in this environment of startup, innovation, entrepreneurship, which is, first of all, quite important for us and also quite inspirational. So let me talk a little bit about, as Elena was saying, the consumer behavior is changing, but there are other threats to the banking industry that I would like to highlight in a minute. I mean, first of all, we are getting used to negative interest rates. Think about the mortgage our partners were paying not so long time ago. It were double-digit interest rate. Reputation of the banking industry is as low as ever. Regulation is putting a lot of pressure in profitability. And not only that, we have new competitors entering the arena. We have not only fintechs trying to disrupt part of the value chain, we also have the new, or the big tech giants trying to enter the banking ecosystem. So we have, and this is a phenomenon that is not only happening in the East, with China, with WeChat, Alipay, it's something that we have started to see also in the Western world. So we have Amazon, who have given more than 5 billion in credit to SMEs. We have already Apple Pay with more than 500 million users, and now launching Apple Card. We have Google, which is the largest player in mobile payments in India. And we have Facebook considering launching a cryptocurrency that has the potential to disrupt foreign transfers. So in this environment, I think, or we believe, that there are three things that can, as an industry, help us to survive and to really compete in this new completely new paradigm. First of all, the mobile. The mobile is changing completely the way we interact with our customers. Think about in the past, when customers only went to the branch. Customer interaction was, customers went to the branch once per month. When customers use the website, we interact with our customers once every 10 days, once every 2 weeks. With the mobile, not only we are able to really get to new segments, so people over 55, over 60, We're able to digitize those customers because using a mobile banking app is as easy as using WhatsApp. So we are able to get to new segments, but not only that, we're increasing dramatically the frequency of interactions. We're interacting with those customers once every day, once every 2 days. And this is very important, this customer interaction concept, because we're able to inject data in those interactions and make those interactions as smart as possible. So for instance, we're able now to tell a customer that he's going to go overdraft 2 weeks from now and offer him or her a tailor-made solution. We are able to help somebody to start planning for the next vacation and start saving for the next vacation, or start planning the retirement. These frequency of interactions allow us to really have a completely different value proposition for our customers. So the combination of the mobile and data is two things that really is changing the way we operate as an industry. The third one, and it's also very important, is the human factor, the human advice. I think this is a very good example, the example of Betterment. I think you all know Betterment is one of the most famous robo-advisors, more than 15 billion of assets under management, founded in 2008, a quite successful example of how to do things digitally. What they started to do 3-4 years ago, they started to add the human touch to their interactions. They started to hire humans. What did they show? Because for certain journeys, for certain customer interactions, you need the human advice together with the digital. This combination of human and digital for certain journeys such as investment, planning for retirement, complex products such as mortgages is quite important. So mobile, data, and human advice are three things that in this new competitive environment are critical for us to compete as an industry. So what we are doing, what are our 4 priorities to leverage data, technology, and human advice and compete in the new paradigm? First of all is growth. We are obsessed with customer growth. We needed to grow our customer base. 5 years ago, 10 years ago, 5 years ago, the only way to grow as a banking industry was to leverage our branch network. Now, we can really grow through digital channels. We can really grow with fully end-to-end digital processes. We don't have to rely in the branch network only anymore. Getting or becoming a BBVA customer is not as easy as becoming a Facebook user or Google user because regulation is there. And so it's a process that may take 3-4 minutes, but it's a pure digital process, and customers can become customers in a very easy way without the need of going to a branch. And not only that, not only they can become customers in a very easy way, they can remove the largest friction to becoming a new customer, which is bringing the direct debits. It's very easy to take a picture of your last utility bill, of your last gym bill, and within minutes, we process that order, and we start having those direct debit at BBVA. So we remove any friction. In countries like Spain, more than 25%, 30% of our new customers are on board to digital channels. In the US, it's more than 35 or close to 40. So this is something that is happening more and more, and it just happened over the last 3-4 years. And it's not only relying on our digital channels, it is also relying on third parties, and it is also quite important. I love the example of Uber in Mexico. This is something that we launched very recently, a couple of months ago. The major or the biggest friction for a Uber driver in Mexico was to get paid after every ride. So what we do, basically we partnered with Uber, and we expose our APIs and our onboarding process, and within minutes, a Uber driver can open a BBVA account within the Uber app. And they get paid every time they do a ride. So we basically are putting our BBVA products in third-party platforms. This is something that is going to happen more and more. How can we leverage third parties to grow exponentially? It is not only big constraints about our branches, big constraints about our digital channels, is to leverage third parties in order to grow and grow more. So first priority, growth. Second priority is to have all our services and products in a DIY mode, making sure that a customer can do everything from their mobile. From the most simple things, getting a transfer, getting a certificate, requesting the PIN number of the credit card, but also getting any financial product or services in a very easy way. 5 years ago, 6 years ago, 100% of our sales were done through the branch network. Today, more than 50% of our sales, almost 50% in value at the group level, are done through digital channels, the website and the mobile. And out of these digital channels, more than 80–90% in certain countries are done through the mobile, not the website. So the mobile has become a critical element in our customer interactions and in our business. And again, it is not only the possibility of selling products digitally to customer, it's also the possibility of offering these products in a more contextual way. So again, alerting a customer that he's going to go overdraft and suggesting him to anticipate the payroll. Having this contextuality and this tailor-made proactivity attached to this product offering. Our third priority, to really combine technology and human advice. As I said before, this is a core asset for us, our human advisors. And customers do want the convenience of doing everything from the app, but they also, as I said before, want the human advice for certain journeys. The important thing is not forcing the customer to go to a branch, it's having the advisor within the mobile app. And for that, we put some tools in order to have the advisor in the mobile app. So I can set up an appointment with him or her, in a very easy way. It can be an appointment, a physical appointment, or can be a remote appointment by phone. I have a chat where I can exchange conversations and I can exchange documents with my advisor. After getting the advice around any product, I can just sign up for the product very easily from my mobile app. So putting all the set of tools for having the best advisor within the mobile app without the need of going to a branch. That's a critical aspect for us. So is to really combine the possibility of having the best of the technology and your human advice combined in your mobile phone. And this, again, this is a core asset for us because it's going to really defend us for the next 5 years. It's going to help us to defend from competition. And finally, is my favorite priority, the fourth priority, is what we call advice. Advice in the broadest sense. So advising customers on a day-to-day basis, advising them to really reach their goals, from going on vacation to planning for retirement, to think about how to optimize the portfolio. In this space, we as an industry and we as a BBVA, we have launched over the last 3–4 years many tools to help our customers to really make better financial decisions. So they have PFM tools, they can create budgets, they can create saving accounts, they can use Valora, which allows a customer to assess the value of any real estate property in Spain online and get advice about getting a mortgage. So this is a lot of self-service tools that allow us to help our customers to make better decisions. What we're doing is go one step further. It's not relying on the customer to be proactive. It's us processing all that information and proactively using the customer data to offer him insightful information and tailor-made recommendations. One example, you get your utility bill. Utility bill this month is much higher than expected. Why don't you check it out? So everything is right, but we advise you to check your utility bill because it's higher than expected. Well, again, we are going on vacation 9 months from now. Why don't you start saving? And the best saving plan is that one, so you won't need a credit to go on vacation last year, no? Or again, we have a financial calendar where we have all the income and expenses projected for the next month. But what if we process that information and say, hey, you may go overdraft at the end of the month because you are getting your insurance bill. The best thing you can do is anticipate your payroll. So we use all this data to be able to proactively make tailor-made, insightful recommendations to our customer. And can be things about day-to-day, utility bills, could be overdraft, but also taking care of them in the long term, helping them to really improve their financial health. So if a customer doesn't have a safety net, making the customer aware of the need of having a certain safety net and start saving for this safety net. If a customer already has this safety net, but he's not really planning for the long term, help the client, make the client aware of the need of planning for the retirement and help the customer plan for the retirement. No? Or if the customer has a portfolio that is not optimized, helping the customer to optimize the portfolio. No? There is plenty of things that we can do with the combination, as I said before, of data and mobile, and proactively address our customer needs. How are we all doing of this? We're basically doing all this through the combination of three things. In-house, we are building many of these things in-house at BBVA. For this, we have really created new capabilities over the last 4 years. Design. We didn't have designers 4 years ago. Now design is a key discipline for us. Data scientists, a core discipline for us. Agile. We have 4 or 5 years ago, we started to work in Agile, and the speed of execution of everything that we do accelerated quite a lot. So in-house is a core pillar for us. The second thing is certain acquisitions or investment. Here, just to illustrate an example, we bought Madiba, a fintech company in Spain 4 years ago, and Madiba is allowing us to really advise customers on how to really get a house and get a mortgage. It's really allowing us to assess the value of any property in Spain, not in Spain, also in Mexico, Colombia, and Argentina, in seconds. So the customer knows if what he's paying is really a fair price compared to the market. And also through open innovation. This is also absolutely critical for us. We cannot innovate everything. We need to leverage the knowledge that is out there, the ideas, and accelerate the speed of our transformation, partnering and working with third parties. And this is something that is super critical for us. Just to illustrate, last year, we had about what we call 300 collisions, which has been working meetings with the startups. And out of these 300 collisions, 2 of them resulted in investments in the US, other resulted in proofs of concepts that we are already testing. Some of them already scaled up. So there is a lot of things that we are leveraging from this partners ecosystem in order to accelerate our transformation. What are the results of all this? So first of all, we are growing more. We have more customers, and we have more digital customers. We are more efficient. We are able to really reduce our customer base. And through our mobile app, that has been recognized as the best one in the world 3 years in a row by Forrester, we are able also to increase customer satisfaction and reduce engagement. No? So just to close, again, out of threats for the banking industry, data, mobile, and human advice as the key factors that is going to help us to really transform the way we operate and really defend from all these threats. Thank you so much. It has been a pleasure to be here. I hope you enjoyed the presentation. Thank you.
There is superstitions, writings on the wall. There is superstition.
Hey, don't go. Where are you going? Where is everybody going? We have now a guest which is the most active Series A investor in Europe. Ahí os dejo eso. So please take a seat, relax. We're going to start in a minute. For those that are coming in, there's plenty of spaces at the front. Don't be shy. I promise I won't make any direct questions, just rhetorical ones for anybody to ask if they answer if they want. Okay, we're going to talk now about road to exit. And if early stage venture is about asking what if it works, late stage venture is asking what is it working? And the latter requires deep expertise in the financial evaluation of businesses. It seems companies are staying private longer than ever now, resulting in a smaller number of actual IPOs. Well, to talk about the road to exit, answer all your questions, the ones you may have in your head, everything is going to be solved today. Because as I was saying, we have with us the senior VP of the largest and most competitive IPO market in the world, which is NASDAQ. Of course, his name is Adam Kostial, and he's going to be interviewed by the principal at Bounderton, Lara Connell. So let's welcome Adam and Laura. Welcome.
Great music.
Yeah, thanks for that.
Great thing.
Hi, everyone. Thanks very much for being here. I'm excited for this discussion. So maybe I'll just introduce myself a little bit, although you've already heard a little bit about me. I'm one of the principal investors at Balderson Capital, so based in London, but we're one of the most active, in fact, the most active Series A investor in Europe to date. I am both involved on the early stage, and I also do much of our later stage investing through our secondary fund. And we'll talk a little bit about that today. I'll hand over to you, Adam.
Thank you. So this is not an interview, this is a conversation.
Yeah.
So I'm just as curious to hear from you in terms of how you work with late-stage companies. I'm responsible for our listing market in Europe, which includes our Nordic markets. We own 7 exchanges in the Nordics, Stockholm, Copenhagen, Helsinki, our largest ones. We've had 40 IPOs so far this year, last year 83, so it's a very active market for growth companies in the smaller size. But we're of course also supporting European companies listed in the US, and there are quite a few great examples over the last few years how they've used the US market. And the US markets has been very hot this last few times, but it's getting a bit colder. So it's a very interesting time to talk about the IPO markets.
Yeah, and perhaps we can kick off there. Obviously, it's been an incredibly busy 12 months.
Yes.
And some very interesting and at times controversial listings. You know, what do you think some of the key takeaways are, and what are your thoughts about how the last 12 months have played out?
Yeah, well, first of all, I think it's a crazy environment that we live in now with these low interest rate environment. And in Sweden, we have negative interest rates, which means that everybody's looking for return of investment, and both in the private landscape and in the public landscape. So I think what we're seeing is we've never seen so much money in the private landscape as we see now. And there's a lot of maturity in that money in terms of helping companies stay private and mature longer outside the public markets. If you reverse the tape back to 2000, companies were coming much more earlier to the exchange, with the negative side that their businesses weren't as mature. Now the challenge here is that there's only so much the private market can do for a company when they reach a certain stage. At a certain point, the public market has additional values that it can bring to this company. And therefore, you're seeing now more and more companies come to market. Of course, the valuations have been very good, but it's not been very easy to transition these valuations in the private market to the public market. So I think we will continue to see a strong IPO market because interest rates are relatively favorable for the equity market. But doing that transition will be much more delicate than it has been before, especially from a valuation point of view.
Yeah, it's so interesting. So if you think back to the first couple of decades in tech, you had the likes of Intel coming to market within 2 years. Amazon, I think, was 3.
Apple was a $50 million IPO.
Yeah, right.
You don't do these anymore.
No, you don't. And so, one of the other trends that we've seen is this debate around IPO versus direct listings.
Yes.
And how do you think about that and the evolution of those two things in tandem?
Well, I think the direct listing is a trend that we're seeing. I think it's here to stay. It's not for everyone. I think it is for a company that's well funded, that is well established, has a very strong brand, and can carry the weight of moving into the public markets with the direct listing. What the direct listing is basically you're selling off existing shares to new shareholders without raising new money. So basically you're transitioning into the public markets in a very smooth and efficient way.
And non-dilutive.
And not dilutive.
Yeah.
Now, the interesting thing here is that the reason why many companies have come to market is to increase their brand awareness, to raise money, and to create liquidity for existing shareholders. But it's not the end game. So at the end of the day, I think even the banks, which were very against the direct listing because their role gets minimized, are now very favorable to it because it's less of a shock to the market to transition to that. But again, it's not for everyone. Spotify did it. We had, now I forget the other company that just did it. But it's Slack. Slack is the company that did it. And Airbnb is discussing it. It's in the papers. So I think it's a trend that will stay, but it's not for everyone.
Yeah. I think the other thing that you and I have spoken about, one of the interesting results of this average time to exit almost doubling really over the last 10 years is that we've seen this development around the secondary market, so an increasingly liquid secondary market. And in the US now, that's a very established market. And so when I talk about secondary, really, we're talking about secondary or liquidity, so an ability to sell shares privately before an exit for early investors, founders, early employees. And that's something we're seeing more and more of in the European market as the market matures.
Is it fair to say that it was a bit of a taboo topic before?
Yeah, absolutely.
Because it was considered to be, you're not keeping the skin in the game. You are taking away. But in reality, what is happening is that this phenomenon of staying private longer and the access to capital in the private environment has created a very frustrating situation because you have a lot of employees that it's their first job.
Yep. Huge cash pay cuts, often.
Exactly.
Yep.
Their value that they have is in the shares. As the company grows and continues to raise capital, they need to buy a car, they need to buy a house, they need to do something, and the only way to create that value is to create liquidity for the employees.
Yep.
So you're actually taking away pressure from the pressure cooker.
Yeah, absolutely.
So that you then go back to work,
yeah.
But everybody has gotten some pressure off. Isn't that a fair way to look at it?
Yeah, I think that's absolutely the right way to categorize it. And just on the kind of first point about this kind of signaling mechanism, or the fact that it can be a negative signal for companies to look for this secondary liquidity, that can be true. And so I think timing for the secondary and framing the reason for secondary to investors is absolutely critical to avoid that kind of signaling mechanism.
So you as Balderton, you're considered, you are the leading Series A investor in Europe. You've now launched a secondary fund.
Yeah.
So can you explain to me a bit how that secondary fund works? Because just to give you a balance, in the US, we run something called NASDAQ Private Market, which is a marketplace for secondaries, for liquidity of late-stage companies. We've done close to 50 this year. We did 80 last year. We probably have 30 more this year. And we're seeing an increased appetite in Europe. But what has been missing is active funds that are willing to buy these secondary shares. And that is what you have established now.
Yeah, absolutely. So we launched this fund last October, and we were the first fund to really focus exclusively on direct secondary, so buying these shares off the shareholders I mentioned. And I think the reason that hadn't occurred in Europe before is simply a question of the maturity of the market. So the way we think about it, and the reason we're so excited about this fund and Europe generally, is that this is a strategy that would not have worked as well 5 years ago. But the sheer number of interesting growth stage businesses coming to market in Europe is astronomical now compared to, as I said, what it would have been 5 years ago. So our logic was, we can see that there's an increasing need for liquidity, this pain point that people need to find a way of taking a bit of skin out of the game for various reasons, partly because of the fact the average time to exit has doubled, but the size of that liquidity pool has also increased significantly because of the number of growth companies that we're seeing in Europe. And so what we set out to do with a $145 million fund is to really directly address that by buying these shares off early employees, founders, and early investors.
Correct. And how many deals have you done now this year?
It's been a very busy year. We've done 8 deals.
Because it's only 1 year since you launched the fund.
Yeah, exactly. It's been 12 months, but we've done 8 deals to date. And what we, I think, are hugely excited about is that as the number of growth stage companies continues to increase and come to market, that pool of opportunity for us to be helpful in situations continues to increase. So it's been a very exciting year, yeah.
I think the topic is maturity, because I think it's also an education thing.
Yes.
Educating the entrepreneurs that this is something, it's a tool to support your scaling. As you're scaling.
Absolutely.
Because it is also a retention mechanism.
Absolutely. And it's also critical in the competition for talent.
Yes.
I think one thing that we've seen a lot more of is CEOs recognizing that structuring employee liquidity such that people it makes tangible their equity gains is absolutely critical from a retention perspective. And so if you have 2 companies, one of which can offer that as a tool, offer that liquidity, and one that doesn't, all other things being equal, top talent will find that former opportunity a more compelling one. And so, particularly as the competition for talent hots up in Europe, that's something that I think more and more companies will have to kind of engage with.
So have you taken away one of my sales arguments? That's what we used to argue. That was the benefit of the IPO.
Right,
is that you can create liquidity for employees, you become a more attractive employer.
Yeah, and that remains true. That remains absolutely true.
I think it's a different dynamic.
Yeah,
but
absolutely.
it is a component of that, which is very important.
Yeah, I mean, I think the way we frame it is this is partial liquidity. I think it's also really important for founders to have access to some of that partial liquidity sometimes. You know, if I think about the huge pressure that founders are under that we work with, you know, brilliant people who, as we said, have seen more and more of their wealth tied up in equity. Yes. At some point, your kind of ability to take more risk becomes impacted. And it's a kind of risk aversion is a real thing. You know, more of your wealth is tied up in it's a liquid asset. Actually, your ability to take a tiny bit off the table makes a huge difference to your risk appetite. So we find it's a really good mechanism for realigning founder incentives and, frankly, appetite for their own business. Yes. At a point at which it's really important they carry on with
it's not something you do the first year. It's not something you do the second year. But it's something you do when you've probably reached a later stage of financing. And I remember listening to the founder of Supercell, Ilkka Palonen, and he always described when they did their liquidity, it was a very difficult moment because you're giving up a certain amount of value because you feel that you're building a castle and you're selling it at halfway price. But what he said, it was the best investment he did to create liquidity for himself and for his fellow founders, but also the employees, because they could then go back with less pressure and just focus on building what Supercell is today.
100%.
And I think, you know, I encourage founders and employees, founders and entrepreneurs, and also owners of their companies to talk to Balderton about the secondary, because it's an educational process. It's about understanding when is the right time to do it. And when the right time is there, how do you do it?
Yeah.
Because I think it's an educational process.
Absolutely.
That you can provide a lot of value to.
Yeah, and I think you know, and that's part of the things that the initiatives that you've worked on as a business is really facilitating those transactions and creating the marketplace that allows them to happen in a painless way. You know, I think rightly, historically, these transactions have been slightly opaque and a lack of transparency around valuation, around the third parties that are entering the cap table when they're buying this direct secondary. You know, and so understandably, people have always historically been a bit more reticent about it. But you know, over time, as this secondary transaction market professionalizes and the market matures, you know, people understand that these things can happen in quite a painless way.
Yes.
They need not be, you know, incredibly high friction.
So hopefully you will get a few more mails in your LinkedIn box.
Absolutely.
But one thing that we always say is that the holy grail is the IPO.
Right.
And my question to you, is this really true? Is this the sense that you, from a VC point of view, do you want to, when you go and invest in a company, do you strive to make this an IPO-able company? That doesn't mean that it's going to IPO, but the ambition should be there, the ambition level should be there, and then at least when you have the IPO as an option, you have one more option on the table. And the best example of that is iSettle.
Yeah, absolutely.
So it was a very frustrating moment for me as an exchange, because I thought I was going to ring the bell with iSettle on a certain date. All the VCs were there. Everybody was, we were educating them, we're training them. And then last minute, PayPal bought the company. And I don't think that transaction would have happened unless iSettle would have pushed the IPO track button. Because they really told the market that we're ready to take the next step in our ownership structure. And I think PayPal woke up and realized, wait, this train is about to leave the station. And if we don't do anything now, then we're going to lose this opportunity. And I think that's the way companies should grow their businesses, is to say, listen, not say I'm never going to IPO, but really understand how to gear up step by step, not from day one, as you mature your business. What are the additional layers that I have to take on and when to be an IPO business? Because then you have one more negotiation tool when you decide that you need to change your ownership structure. Would you
Yeah.
agree? Is that something that you discuss with your
Yeah,
companies?
yeah. Well, I think the word that you hit on, which is absolutely critical, is this idea of ambition. And so when we invest in founders and winning teams, what we're looking for is the scale of ambition that would, to build kind of the next leader in whatever category they're active in. We're agnostic in principle about exactly what that exit looks like. Obviously, everyone likes the kind of the IPO. It's a very public endorsement of things that have gone well, but there are lots of absolutely fantastic routes to exit that aren't necessarily an IPO. And so
Yes.
in the end, from our perspective, we know full well that the best we can do is support them, as you say, ensure that if it is something that they want to do, which it should always be part of the game plan, right,
Yes.
as a company matures, it's one of the things that you can consider, that we're helping them structure the route to IPO appropriately. That means hiring the team, the CFO, so the canonical advice here when preparing for an IPO is you've got to hire the right team, someone who focuses on getting the game plan in place, and then the two other elements are, in terms of timing, understanding what the right volume is.
Yes.
Where do you need to get to in terms of creating a credible story about the size of your market? And secondly, having sufficient predictability in your revenues. And when we think about predictability, it's really being able to clearly understand the key levers. So if something's happening in this bit of your business,
Yes.
you know exactly how it impacts your contribution margin or bottom line or whatever it is. So having that predictability of revenue over a couple of quarters or a 12-month basis is absolutely critical.
I agree entirely that the message that we typically tell companies is that it's not only about growth, it's
Yeah.
not only about profit, it's about the predictability in what
Yeah.
you're in your business.
Yeah.
If you're able to deliver on that predictability, then you're building confidence with the investors.
Yeah.
And there are so many investors out there looking for all different types of profiles. So whether it's growth, whether it's profitability, but ultimately they're going to build a trust with you as
Yeah.
a manager or as a CEO that you are delivering on the goals that you're predicting.
Yeah, absolutely.
So, and the other thing which I would argue is that even though iZettle was acquired by PayPal, PayPal listed on NASDAQ, it is interesting to see that companies that are listed have one more mechanism to grow their business, and that's through
Yeah.
acquisitions.
Absolutely.
And I think, keep in mind, we're always arguing that Facebook and Google are buying all the startups, but they were a startup at one point themselves.
Yeah.
So, the reality is that it is a platform for growth.
Yeah.
And once you aim to get there, hopefully, managing the secondary market is a tool to reach that level of
Yeah.
maturity.
Yeah.
So I think our time is up.
Yeah.
But I encourage you to reach out to Laura and to Balderton, because I think the secondary fund is very exciting. It's a reflection of the maturity of what's happening in Europe. And if you're interested in IPOs, whether you're a startup or you're early stage or late stage, we're always willing to take a discussion. So thank you very much.
Thank you. Thanks, guys.
Woo! Hello, everyone. Woo, I see a lot of new faces. Welcome to this Arena stage. For those of you who are joining us, my name is Helena. I'm the MC on this stage this morning. I'm happy to see a full house. I can see there was a lot of interest in NASDAQ and a lot of interest on what's coming next. We're going to talk about mobility, the client, the future, and Renfe, which is, as we say, Marca España, isn't it? Hey, Marca España! Marca España! How many Spaniards in the room? Woo! Renfe, Marca España! We have Telefónica here, Guaira, Marca España as well. I'll give you some figures so you know what I'm talking about and you agree with me, this is true. The Spanish National Railway Network, Renfe, is a giant, employing nearly 14,000 people, generating 4 billion euros in revenue. 4 billion euros with B in revenue. And it's profitable too, 111 million euros net income. But not only is big, it's fast. Only China has a bigger high-speed network than Spain. And if you're never taking a train in Spain, you're probably in for a very pleasant surprise. And I'm sorry, I know I'm Spanish, and I say this because if you've traveled around the world and then you come and take a train in Spain, that is luxury. It's clean, it's lovely, it's fast. modern, comfortable, and very reasonably priced. They're obviously doing something wrong. To talk about, no, I'm just kidding. They're doing something right. And to talk about this and the future, what the future may bring, we have invited an executive management expert with over 30 years experience in transfer from operator and infrastructure perspective, both in executive positions and in public transport companies and relevant positions in the public administration. He has a very long CV. Just check on the internet. It's fantastic. But he's here as the Global General Manager of Development and Strategy of Renfe to chat with a well-known business journalist from Cadena SER. So please, let's welcome Manel Villalante and Rafa Bernardo. Rafa, Manel. Let me just switch to Spanish. They're going to have this conversation in Spanish, porque en España nosotros somos así, hacemos lo que nos da la gana. Así que esta conversación va a ser en español. Sabéis, you know that we have translation on the South Summit app. And you guys, sin presión, pero tenéis aquí la casa llena, ¿eh? Hay mucho familia. Las primeras filas.
Hemos traído muchos amigos. We are a lot of friends.
Pero los del fondo no son amigos, estos son gente interesada. Así que sois los afortunados que hacéis la charla en español, ¿eh?
Bueno.
Que no se entere nadie. Thank you.
Muchas gracias. Pues muchas gracias, Elena. Muchas gracias a todos. Como ya han presentado a Manel, ya sabéis que estamos ante todo un experto y a mí como periodista especializado en emprendimiento, estas situaciones son un poco las que más me gustan, ¿no? Cuando hablas con un representante de una empresa grande, con una tradición de decenas de años, ¿no? Con unos modos y maneras de operar característicos de un agente hegemónico en su sector, que se está poniendo al día, que está enfrentándose, ha tocado este aire de la innovación y de la disrupción, ¿no? Característico del emprendimiento. Y bueno, para los que hayan estado aquí el año pasado ya saben que hay una iniciativa que es TrendLab, que lanzó Renfe precisamente como aceleradora de startups. De ella empezamos hablando, si te parece, Manel, y vamos profundizando un poco más. Dinos este primer año, ¿qué tal ha ido? ¿Cuál es el balance? ¿Qué es lo que habéis aprendido de este TrendLab?
Uy, hemos aprendido mucho, pero sobre todo hemos aprendido a conocer lo que el sector de la innovación y de las startups representa en nuestro país y en el conjunto del mundo, ¿no? Se han presentado las dos convocatorias 300 empresas, de ellas gran parte eran proyectos de una enorme calidad, con un espíritu innovador, y aprendimos mucho, incluso los que desgraciadamente no pudimos escogerlos, ¿no? Porque estábamos limitados, pero fueron 4, o 3, muchas de ellas están ya empezando a hacer pruebas y trabajando, el chatbot de Exiguan, el mantenimiento predictivo a partir de los datos que capta el propio tren del IMAT, IOMOP, que es la startup que nos ayudará en la prueba piloto que haremos para lo que es nosotros el gran proyecto, que es Renfe as a Service. Por tanto, hemos aprendido mucho, hemos conocido el sector, hemos abierto, ha servido también para generar dentro de la compañía innovación interna, hemos creado grupos de calidad, por tanto hay proyectos de innovación que en el mismo marco de TrendLab lo hace personal de Renfe, por tanto captamos el talento externo, potenciamos la apertura y el conocimiento del talento interno de la compañía y por tanto no solo es interesante en términos de producto, no solo es interesante en términos de conocimiento de la realidad y del potencial que tiene nuestro país en innovación, sino además es un elemento, un vector de transformación de la propia compañía. Por tanto, yo creo que es un triple éxito que es parte de todos, parte también del partner que hemos tenido, que es Telefónica, Guaita, Telefónica, es parte del éxito de la gente que ha trabajado y, por tanto, estamos más que satisfechos y por eso vamos a ir ya por la tercera convocatoria a partir de ya.
Ahora, ¿no? Has dicho eso de Renfe as a Service, que yo creo que esto que estábamos hablando es el presente y el futuro inmediato es este Renfe as a Service, ¿no? Que de alguna forma quiere transformar la naturaleza de vuestra compañía hacia lo digital y hacia convertirse más que de un proveedor directo de servicios de transporte también en un jugador que distribuya de alguna forma, ¿no? Juego en todo el sector, más allá de las fronteras del tren. Cuéntanos un poco cuál es la ambición de este proyecto.
Me remonto un poco cuando vimos que aventuraban tiempos de cambio, básicamente por la transformación digital, que tiene, como no hace falta decirlo en este foro, fenómenos disruptivos, el crecimiento de la economía colaborativa pasando a economía de plataforma, la internacionalización, la liberalización y, por tanto, que a partir del año próximo tenemos que competir no contra el coche y contra el avión, sino también contra, digamos, otros operadores ferroviarios de nuestro país. Dijimos que eso obligaba a hacer un plan estratégico. Entonces, dentro de este plan estratégico, vimos que una amenaza para nuestra compañía era la transformación digital, el término de que empresas sin activos pudieran utilizarnos como utilities, no nosotros, sino al conjunto del sistema de transporte, el ecosistema de transporte, que es mucho más que el transporte público, también son los patinetes, los scooters, las bicicletas, los coches compartidos, etc. Entonces dijimos, eso es una amenaza, pero sobre todo es una oportunidad, un vector de transformación. Pues dijimos, y está así en nuestro plan estratégico, convertiremos nuestra compañía, sin dejar de ser un operador ferroviario de referencia, el único, y esperemos que cuando no sea el único siga siendo el mejor en nuestro país, referente internacional. Queremos que además sea operador integral de movilidad. Por tanto, que en el espíritu del Mobility as a Service, lo hemos traducido a Renfe as a Service, es poner la digitalización al servicio de acompañar a nuestros clientes desde puerta a puerta, aunque solo una parte de ese trayecto y eventualmente ninguna parte de ese trayecto vayan con nosotros. Por lo tanto, queremos acompañarlos y para eso pues, tenemos una aplicación, una plataforma que permita conocer, generar y crear itinerarios, personalizar de acuerdo con las pautas de movilidad y por final poderlo pagar todo de una forma integrada. Y por tanto ese es ese espíritu y queremos hacerlo de forma inclusiva, no abierta a acuerdos con otras plataformas, con otros operadores de transporte, que sepa cuando tenemos el mundo del transporte es un mundo complicado y cada comunidad autónoma tiene su sistema, pues cuando vayamos a una comunidad autónoma difundirnos dentro de ella, pero también cuando en el extranjero puedan utilizar nuestra plataforma y viceversa. Por lo tanto, abierta, pero salvaguardando los datos que son de nuestros clientes y nosotros administramos y que ese rendimiento que den los datos redunde en el ecosistema de movilidad y, por tanto, eso es convertir la empresa sin dejar de ser un operador ferroviario de referencia a ser un operador integral de movilidad. Por tanto, es la digitalización al servicio del cambio, de la mejora del interface con el cliente y como vector de transformación de la propia compañía. Sin perder las esencias, esa es la nueva Renfe. La Renfe que tendremos próximamente, sí.
Manel, citabas hace un momento que ahí tenéis unos potenciales rivales, ¿no? Que son las grandes plataformas y las grandes empresas digitales que no se dedican, o no necesariamente, ¿no? al negocio de la movilidad, pero pueden irrumpir en ellas, tú decías, porque no tienen esos activos, no tienen las redes de transporte, no es su principal ocupación esa. ¿Cuál sería de alguna forma vuestra ventaja o el punto extra que le podéis dar vosotros a esta competición, si es que finalmente se desencadena así como competición?
Se puede llamar de esta manera. Sí.
Eso es. ¿Qué es lo que os aporta a vosotros? Pues tener todas estas infraestructuras, todos estos vehículos, todas estas, ¿no? que ellos no tienen y, por tanto, de alguna forma uno podría pensar, igual son más ágiles los de la competencia. ¿Vosotros veis alguna ventaja en lo que sois para convertiros en esta referencia?
Bueno, nosotros siempre planteamos todos los proyectos de innovación, y este lo es en mayúsculas, como un aprender y enseñar, un intercambio de conocimiento, ¿no? Porque es que no puede ser de otra manera. Entonces, nosotros lo que tenemos son unos activos, en el caso de una empresa pública, que además los han pagado entre todos los españoles en forma de infraestructuras, de material, de costes de funcionamiento, que además en determinados servicios, excepto el AVE, está subvencionado y, por tanto, el propio Estado paga para que paguemos menos a usarlo, como pasa en muchísimos países, y es parte de la cohesión social y el estado de bienestar, y eso es lo que hemos de defender. Tenemos de defender que el sistema de movilidad 4.0, para llamarle de alguna manera, defienda esos valores, prioridad del transporte público, que la tecnología esté al servicio de las personas y no de los determinados intereses económicos, que mejoremos la calidad ambiental, la eficiencia del sistema de transporte, que mejoremos como empresa. Entonces, poner en valor estos activos. Entonces, podríamos no hacer nada y un activo importante, el combustible del siglo XXI, como se dice machaconamente, que son los datos, ponerlo al servicio de alguien, pero nos parece a nosotros que nuestros activos, que los ha pagado todos ustedes, los que tributan en nuestro país, ¿no? Que los hemos pagado entre todos, que eso, los beneficios que eso dé y los datos que generan ustedes utilizando nuestros servicios, eso vaya a beneficio del conjunto del sistema. Pero entendemos que el sistema no empieza y acaba en el ferrocarril. Puede empezar andando a pie, cogiendo un patinete colaborativo, soltándolo, llegando a Madrid, cogiendo un autobús de la MT, luego cogiendo un Car2Go. Bueno, pues eso es el ecosistema de movilidad. Queremos que el transporte colectivo y el interés público sea el factor dominante, pero no exclusivo, porque esa nueva movilidad da capilaridad y donde no llega el sistema de transporte público puede llegar esas nuevas formas de movilidad. Y eso es lo que hemos de intentar entre todos crear y eso es lo que yo creo que es el cambio estructural de la movilidad de nuestra empresa y la tecnología es el elemento que lo cohesiona.
¿Tenemos un calendario, Manel, más o menos, para cuando estos...?
Sí, esto siempre me da miedo decirlo, pero nosotros vamos... queremos que a lo largo del año 2020 la plataforma, que sea una plataforma escalable, porque eso no se pueden dar pasos atrás y ha de ir ganando, y es un proyecto que no se acaba nunca. Pero queremos que el año 2020 la gente lleve en su bolsillo, a veces llevamos más inteligencia a veces que la que llevamos en la cabeza, ¿no? Y la usamos poco, no la cabeza, la otra. Bueno, pues que la otra la usen, por lo tanto, que estemos allá. A lo largo del año 2020, coincidiendo además con el periodo en que habrá competencia a finales del 14 de diciembre, por tanto, entre verano y otoño del año próximo, eso estará en el mercado, en la nube y en el mercado. Antes, eso es un poco cuña publicitaria, digamos, ¿no? Antes lo pondremos en marcha una prueba limitada. Dentro de poco, a través de nuestra web, vamos a poder seleccionar 500 personas para que en una prueba de concepto en el corredor más usuario, Barcelona-Madrid, puedan de aquí, digamos, de mediados finales de noviembre hasta febrero del año próximo, tener una prueba de concepto que nos permita conocer, lo haremos además a través de varias empresas, pero con el núcleo de la aplicación que ha diseñado IOMOP, que es una startup de la primera convocatoria de TENLAB, tener esa prueba que nos permita ver la aceptación social, pulir algunos detalles, etcétera, antes de lanzar prácticamente de forma simultánea los primeros concursos que como empresa pública tenemos que hacer para adquirir la plataforma, el servicio, el modelo de gestión y en paralelo, y ya estamos en ello, buscando acuerdos. Por tanto, esa prueba también será escalable, se podrán apuntar quienes estén interesados en nuestra web en breves días, supongo que será semanas, pero en cualquier caso antes de acabar este mes, para poder seleccionar estos 500 personas, usuarios que puedan probar y podrán probar también pues, como otros servicios, vincular el AVE con el taxi, con otras formas de movilidad. Eso ya lo iremos explicando cuando toque, digamos, pero sí. Eso es una prueba de concepto, no me gusta llamarle piloto, porque piloto parece que sea un avance de lo que va a ser después. No, es una prueba que probaremos muchas cosas, que entendemos que nadie se sienta defraudado, pero que podría haber pequeños fallos y que lo hacemos para detectar antes de ir a lanzar el proyecto. Por tanto, siempre decimos que para andar hay que empezar a caminar, ¿no? Pues esa es nuestra primera andadura, un poco a gatas, pero el año próximo andaremos bien de pie y gradualmente iremos ganando fondo y velocidad.
Pues Manuel, me queda preguntarte, con el tiempo que nos queda, TrenLab...
Queda poco.
Queda poco.
Yo podía quedarme aquí todo el día. Hasta podíamos hacerlo en inglés, pero no.
En una
mejor que no.
Te quería preguntar, TrenLab, estos programas de intraemprendimiento que tenéis en marcha en la empresa, Renfe as a Service, bueno, ¿qué es lo que habéis aprendido en todo este año largo, ¿no? en el que lleváis pensando en esta innovación, con ese horizonte que tenéis además de la liberalización del transporte de viajeros el año que viene? ¿Qué es lo que habéis aprendido de estas nuevas empresas y de este nuevo, en fin, y de estas prácticas disruptivas e innovadoras y que hayáis incorporado ya, digamos, al ADN de esta compañía?
Mira, yo voy a decir una cosa que como tengo aquí, veo a unos compañeros de Renfe, igual, pero como me han escuchado en privado, y en público también lo he dicho una vez, una empresa ferroviaria y que mueve los millones de personas que movemos cada día y al conjunto del año, y que va a la velocidad que vamos, tiene que tener un valor sagrado que es la seguridad, ¿no? Y con eso, poca broma, ¿no? Es el core business de nosotros, ¿no? El segundo es la gente, el cliente. Entonces, a veces esa forma de trabajar de material costoso, que hay que garantizar la seguridad, genera un cierto, digamos, dificultad de percepción de los cambios transformadores, ¿no? Si no son que gravitan sobre la seguridad. Entonces, el abrirse a la innovación abierta, que son la universidad, son las startups, es una parte de captar este conocimiento y también ayudar a, sin perder las esencias, transformar la empresa. Eso es lo que hemos aprendido. Y luego ha servido, y eso me siento enormemente satisfecho, pero el emprendimiento de ver que dentro de la empresa nació gente que decía, oye, ¿y nosotros no podemos participar? No está en las bases, no está previsto. Y cuando vimos, ¿por qué no hacemos unas bases para el personal de la empresa? Y que gente que está trabajando, y muchos de ellos son proyectos que no afectan lo que hace cotidianamente, sino que en otras áreas de una empresa tan grande puede pensar, eso seguramente es el motivo que a mí me ha hecho más satisfacción. Decir, hombre, pues somos abiertos afuera, pero sobre todo somos abiertos a dar oportunidades a la gente que está dentro y que ese espíritu innovador, como gota fina, cale, ¿no? Y en eso, por tanto, yo creo que es una gran experiencia en todos los aspectos y bueno, vamos a seguir, ¿no? Ahora la convocatoria sale ya, se van sucediendo y bueno, espero que no se desanime. Hay bastantes repetidores, o sea, si no salen, vuelvan a presentar. Los que se han presentado y no han salido, vuelvan, porque son buenas experiencias, no tenemos para todos, pero sí que nos gustaría que hiciéramos una especie de ecosistema de candidatos a TrendLab, no solo de empresas que han ganado. Entonces, a veces debería ser tan importante, y lo saben ellos, la gente que se presenta y no caben, y hacemos un mecanismo de decisión absolutamente transparente, lo valoramos, lo pensamos, desgraciadamente no. Entonces, ese capital humano, científico, talento, en TrendLab o en otra forma tiene que haber salida, porque el futuro del desarrollo tecnológico de nuestro país y del cambio social está ahí. Y eso hemos de arbitrar formas de que vaya adelante.
Pues el año que viene hablamos de esto, de la puesta en marcha de Renfe as a Service,
bueno,
un montón de cosas.
Caerá más o menos bien, sí. No, el año que viene vendrá el presidente, que no ha podido venir, desgraciadamente. Espero haberlo sustituido razonablemente bien. Vendrá el presidente y lo explicará.
Muchísimas gracias, Manel.
Gracias a vosotros. Adiós.
Gracias, Manel. Hello. Hello, everybody. Wow, we have a full house, people coming in, people going out. Please come and join us at the front. We have plenty of space. Those who are leaving, please, can you do it in silence? Those who want to join us, there's plenty of room at the front. Yes, 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 we are going to talk about Huawei. How couldn't we? So welcome, welcome everybody. And the title of this keynote is quite intriguing, don't you think? And you have to say, yes, yes, and I ask you, what is the title? Oh, I've forgotten to read the program. Okay, the title is Huawei and the Grail of Darwin. Intriguing, yeah? As you know, Huawei has grown enormously and is the second largest manufacturer of smartphones in the world, with more than $100 billion in revenue. $100 billion in revenue, not bad. But it also found itself at the center of the worldwide latest information and customers' minds. Well, today's keynote, with this intriguing title, The Grail of Darwin, what could that be about, and Huawei? Do you think it's the survival of the fittest? Rhetorical question? Well, all the answers to this and more are coming from our next speaker. He is the VP of Huawei Mobile Services Europe at Huawei. Please, let's welcome Dr. Jaime Gonzalo. Welcome.
Gracias. Muchas gracias. Thank you very much. Thank you, and welcome to the Huawei keynote of South Summit. My name is Jaime Gonzalo, and today we will not talk about our phones. You already know everything about our phones in terms of good battery, better chipset, best camera. Fine. Today we will talk about something that maybe you don't know and that only Huawei does. Is unique to Huawei, and instead it can help all of you, no matter what is your sector of the industry. This domain we are talking about is what we call the intelligent storytelling ecosystem. And it focuses on user acquisition and retention. The Grail of Darwin is a representation of our quest for permanent evolution. Not change, but evolution. So let's see if the clicker follows my lead. OK, doesn't seem to follow. Yeah, fine. OK, very good. So change versus evolution. The purpose of change is to preserve the status quo. Can we move on to the next click? Sorry. So the purpose of change is to preserve status quo, to replace parts that don't work in a system, to keep things running as they are. The purpose of evolution is to render the status quo obsolete, to move to the next barrier, to the next frontier. That's what we do in our hardware, in our software. So evolution towards where? Where are we heading? We are heading towards a fully connected future. In that future, you know, you read the news, and there is self-driving cars, smart homes, smart cities, parking lights that detect movement, and then they turn higher, lower with artificial intelligence. We are going to that future in which each of us will own 1,000 smart devices. Currently, maybe you have one or two. Maybe you have a smart band. You have a smart speaker. So if you have any of these, how does it all start? You get it out of the box, then what? Then you configure it with a phone. So it means that the phone is the neural brain of a family of 8 different blocks of intelligent devices that enable unlimited possibilities in all the domains of life, in entertainment, in travel, in office, in medical, in whatever. 1 plus 8 plus n. Okay? So this evolution of connectivity has an evolution in the business models. What I'm going to tell you is something very clear. I will use the example of the video game industry that I know very well. The old model of games was about, OK, buy your game, and then whatever you do after that is your problem. If you play or not is up to you. Same happens with the cinema. You buy your cinema ticket, and then if you decide to sleep through the whole movie in the cinema, it's up to you. It's fine. Well, with the new era of mobile games, as South Park explains, with freemium, getting the game is free. And then the more you use and you keep engaged with the service, the more chances you have to get monetized. So the main difference in the business model is that previously we had a focus on the pre-acquisition moment. You focus on people to buy you. Once that they buy you, okay, thank you very much, bye, enjoy. In the new model, you focus especially on the moment post-acquisition. Oh, you got my app. Okay, hello, let's talk. Oh, you register a profile in our account. Okay, very good, let's do things. Let's send push notification to you. Let's use it, let's engage, let's do a lot of fun stuff together. Yes? These changes fundamentally also makes evolve the communication to the user, right? So, in the previous times, classically speaking, the communication happens offline. It happens physically. You know, oh, it's after Christmas, let's go shopping, let's see what they have. You know, you go to the stores, find in there your communication to the user. That changed, evolved with the e-commerce era. This is not new, everybody knows. The e-commerce era, with 75% of internet users already embracing e-commerce, changed that, and then everybody, especially these people that we call suddenly digital marketers, started to put banners in every website. Well, this is what's happening. E-commerce is already starting to be obsolete. And this is not news, you know that. You know what is the next coming. What is the evolution of e-commerce? The m-commerce. So at this stage, there's 55% of internet users that prefer to do all the actions, all the purchase, everything in their lives, book a taxi, order a pizza, book a flight, booking online, banking activities, no matter the sector, the phone remains the main window to interact. I would like to draw your attention to the last picture. Do you see anything, do you notice anything weird? A group of millennials, they are meeting to watch TV together, and none of them is looking at the screen. And none of them is talking to each other, where actually they are talking to each other, just not verbally, not face-to-face. They are talking through their phones. So the mobile phone not only is the center of the future, but is also the window of these people to the universe and the door of the universe to them. So talking about the evolution, are you evolving to that era of m-commerce? Because in that era, the main challenge is to get the attention of these users. When your window is so small and you have to be there, some people and some companies are still using the second e-commerce trends for the m-commerce era. Why? How do you think these people in the last image feel when they are reading an article and you bombard them in the middle of the article with a pop-up with your brand? How do you think they feel about it? Wow, I love it. I'm going to spend so much money in this brand. Or they are thinking, this is quite bothering. I would like this ad to disappear so I can continue reading. When they are seeing their feed of their friends, and suddenly it gets interrupted to show a video of a brand that is interrupting the activity, do you think that contributes for them to be engaged with you? Maybe it's time to change. It's time to evolve and embrace the the mobile e-commerce evolution, the mobile commerce, and understand what is driving the attention of the users. So yes, banners in social networks play a role because users who use social networks, but we receive 3,000 impressions per day. Now we are in the middle of the day somehow, so you already received about 2,000. 2,000 marketing impressions on your phones until now. How many of them did trigger an impulse of spend on you? How many you remember? Out of 2,000, do you remember 10, 5, 0? Because that's not the way. It's not about bombarding with images. It's about understanding that social networks play a role, but also users use the phone as their identity. They configure it in a way that it feels personalized for them. They consume more and more video content. Music, what happens with music and mobile? You go to a concert, it's not guaranteed you will like the music, but it's guaranteed there will be people recording videos about the music that they will never watch again. And even fun situations. it seems necessary to filter fun through a mobile to make it even more fun. Otherwise, it's like incomplete. This that I'm describing, ladies and gentlemen, this is a life cycle. The user, when you as mobile phone users, when do you use your phone? In the morning, or in the afternoon, or in the evening, or at night, or you're waiting for the bus, or in the toilet, or when you wake up in the morning? All the time. All the time. The mobile is versatile, and you need to adapt to this life cycle, and that is what Huawei has created. So if you were not paying attention until now, I recommend that you pay attention now, because this is what nobody else is doing. A first-party, interconnected ecosystem in our phones, designed for the future connected and for the current universe of the users of mobile. What does it mean, connected first-party? It means first-party. When you watch a movie of, let's say, Netflix or HBO, whichever great service you want to use, the TV where you watch it is not done by them. It's built by someone else. When you listen to a song of Spotify in a speaker, the speaker is not done by Spotify. It's done by someone else. So there are, of course, levels of compatibility. These services are built in joint R&D by Huawei with the machines. It means for the user, there is no better experience to watch video in a Huawei phone than Huawei Video. That's already very good to engage and to deliver an optimal experience, but it's interconnected. It's an ecosystem. What it means, this is the example. Let's imagine you love the movie Braveheart, yes? You love watching Scottish people running around without trousers, and then what a movie service will recommend to you is amazing. Watch it again. Or watch another movie of the same actor, or a similar movie. But it will never recommend to you, oh, now that you are jogging and doing sports, why don't you listen to the soundtrack of this movie you like? Now that you're waiting for the bus, why don't you download a game of strategy of ancient Britain? Now that you're in London, why don't you get a ticket of Madame Tussauds to see the statue of Mel Gibson with a blue face? It doesn't, because it's not an ecosystem. So your story is incomplete. And then you are in an ocean of apps, you are 1 in 2.4 million. You're an icon. The M-commerce era cannot be an icon. And I will tell you why. Let's imagine an app that you use all the time, every day. I don't know, WhatsApp. Do you use it because the icon was so green, so perfect circle with a phone inside that you had to get it? Because the banner you saw was amazing. You watch YouTube because it's so red and no. You watch them because someone you trust told you a story about it. Why did you open a Facebook account? You remember? Nothing to do with an icon, with exposure, with bombarding you. Somebody told you something and you trusted that person. Humans, how do they transfer knowledge from generation to the next one? By pushing images or by telling stories, metaphors. That's how we have always done, because that's how the human brain works. Stories, yes? So for those of you that start to understand that evolution of business means embracing the mobile stories, we have good news. Because Huawei is a storyteller partner. We tell stories to 570 million people as we speak. Stories about what? Stories about content. Stories about you. We are a platform. We don't produce content. We tell your stories. Yes? 170 countries. And the best part is that users trust us more and more. Even this year, with all the drama in the press, we are going to ship more phones than last year. Because we are not an advertisement company. We don't care if you're a man or a woman or how old you are. We just care that you like Braveheart. So we are going to promote content that is good for you, and is going to engage with you, and it's contextual, and it makes sense, and there's a story around it. We focus on privacy and security and in protecting our users. And they know. So all this in theory looks very good. Let's see in practice what does it mean. So this is an example. Is there anyone in the audience who likes racing games, like car games? You can raise your hand so that we see. Yeah, there's some people, good. So it's your lucky day, because in our app store, the first icon in our game section is a racing game. Wow, for the icon mentality companies, this is the best that can happen to you, right? This is super engaging because you are very promoted. So for those of you who like these games, feel internally how impacted, how interested you feel about this icon compared to Waking up in the morning, and the lock screen of your phone has a super sleek image of a racing car to say, good morning. You open the phone, and it says, configure your phone for free with the background, with the icons that you want about the topic that you like, you know. And by the way, this all comes from a game called Nitro Nation, that by clicking here, that's what the text is very small, but it says clicking here, you can download the game, actually. A configuration store, a wallpaper store, is opening an app store. You continue, and then in the browser, when you go to the news page or whatever, there's a shortcut, a quick link to the game. A browser is opening an app store to download a content that is contextual. Then Huawei Video promotes a video at the top that is not an ad. It's a storytelling of a producer of the game. This is how we designed our Porsche. This is how we created whatever features of the game. This is the finals of an esports event, whatever. Again, we are talking to a fan of car games. Then in the afternoon, you get a push notification. Yes, you don't have the game yet, and you got a push notification about the game. For you developers, those of you who know that, you can only send push notifications to those who have your app. But we have created a connected ecosystem of first party, and we can do that on our own. So finally, if you click on any of them, where you get is to a reward. Get your Chevrolet Camaro for free. You know, a reward. So the experience is like something that is not an advertisement, it's something for you, it's valuable, and then our app store will be configured for that. This that you see here is an ecosystem of storytelling, intelligently done. So for those of you who said you liked racing games, you can compare the icon that you saw, how engaged you felt about it, with this. It's dimensionally different, yes? But here's the catch, here's the catch. This is a freemium world. Has any of you ever downloaded an app that you never opened? It happens, yeah? Yeah? I did, many did. So it's not about downloads. I got many downloads, nobody opened me. Well done. So it's about what to do after that. We need to keep engaged after that. And that's why when we have achieved even the redeem of the game and the code and so on, we go to the offline activation. We do PR. Everybody knows Huawei is a hot topic in the press now. People read about Huawei. We can talk stories about partners. We do events, people like me, events like this, talking about apps like Nitro Nation. Now you know this game because I mentioned it. Why don't someone like me speak about your game or your app or your service next time? Experience stores. We have 60,000 stores in the world selling Huawei phones, one in Gran Via in Madrid in the center of 2 floors that we can show to people, let them discover our phones and your app preloaded so that they discover together. They can try, they can touch. We have influencer channels that belong to Huawei, and we promote apps like that one. We're promoting Wattpad. China, you're interested in China market? That's an obvious one. We know that market very well. And finally, social networks. You know, it's so easy to organize. Okay, you take a game, take a screenshot. The better screenshot with more likes wins a phone. Who from your audience of user base likes top quality phones with the best cameras? All of them. So it's very relevant. And here's your favorite slide in my presentation. It's free. We don't charge you for this because we are a platform of storytelling. You tell us a good story, a good value for our users, and we will do it for free. Not only that, we are going to invest $1 billion in creating a strong ecosystem for Huawei users. In diversification, in different pots. It's about commercial part, it's about marketing, it's about engagement. If you have a good idea for Huawei users, you want to innovate, you have creation, you can talk to us. My colleagues are giving 2 workshops today to explain this in more detail and to partner with us. So how to do this? If you have a camera, I recommend you take a picture of that website because that's the beginning of the journey. It's very easy to remember anyway, developer.huawei.com. 1 million developers already registered. It's free, and it takes about 30 minutes. You have global access to everything we are doing. And from there, you get reports, you manage your apps, you get APIs of development of AI, AR, VR, any advanced technology, and support. So if you are not part of our family of partners, and I'm sure that some of them will ring a bell and you might know some of them, there is no excuse. Come talk to us, and let's grow together. And with that, I end my presentation. Thank you very much for your attention, and remember, evolve with time. Thank you very much.
Thank you, Jaime. All right. Thank you, band. We have to continue quickly as we're running a bit behind schedule. And we're going to talk with somebody that is betting in the Spanish tech industry. As you know, since Silicon Valley began, our world cities across the globe have been competing to build technological hubs. We have Google Campus in Madrid, one of the few offices of the 6 offices around the world. Barcelona is doing pretty well, and we have somebody here to talk about their bet in Spain and in particular in Barcelona. We're going to have a fireside chat between Lina Chong. She's the VC at Target Global. As you may know, it's a €100 million pan-European investment firm that is betting in Barcelona, in Spain. And she's going to be interviewed by our own dear Carlos Pierre. He's the CEO and founder of Buddy. As you know, it's rooms for rents, flatmates, and they have already a Series A and B for a total of $40 million. So with further ado, please, let's welcome Lina and Carlos. Lina? Carlos, welcome.
Okay, so thank you very much for the introduction. Today I'm here to interview Lina from Target Global.
Hello. Hi.
Hi, Lina. This is kind of weird because usually I'm the one who it's being interviewed by investors, but this is going to be, I think, the first time that I'm going to interview an investor. And we are, both of us, here today because Target Global, they invested on a company, Buddy, 2 years ago on our Series, in Series B. And you just opened, Target Global, an office in Barcelona, which is great. So tell us a little bit, why Spain? Why did you choose Barcelona?
Yeah. So I started visiting Barcelona effectively around the time when we met. Yeah. Meeting a lot of different companies and founders, and I was, every time I came to Barcelona, I was impressed. I was just consistently impressed. I thought, okay, there's some macro elements at play here, right? There's, it's very, very early days in terms of risk capital being invested in Spain in general. Madrid, Barcelona, obviously being the two key ecosystems. But it's still super early. I mean, Berlin 5 years ago had about $1 billion invested, and according to ASCRI, who knows if these numbers are super accurate, but in 2017 had barely $750 million invested in all of Spain. So I thought, okay, it's very early, and as an early stage investor, I like to go in very early into places. And from my view, the only real way to get to know an ecosystem is to be immersed in the ecosystem. So.
Great.
Yeah, I think there's
Perfect. So more specifically, can you tell us the key indicators that you usually look, and also the key indicators that made you and Target Global choose Barcelona in this case?
Yeah. So there's many indicators, and I can speak also of some of the internal indicators, right? So Target Global, we're a pan-European fund. And for every 10 companies that I would meet in Barcelona, Madrid, also around other areas in Spain, there was at least 1 or 2 out of 10 that consistently went to our investment committee. And so it's not to say, just in Spain alone, right? We're benchmarking this against pan-Europe. And this became a very, very surprising kind of outcome. We didn't know so much about Spain some years ago, right? We have offices in Berlin, in Tel Aviv, in London. We're investing across Europe. And then all of a sudden we saw, Buddy, TravelPerk, Mediquo. One of our companies, Doc Planner, came and acquired a business in Barcelona and moved their headquarters there. So I mean, these are some of the internal indicators.
Yes.
And then there's some other indicators just from my observations. I think there's a lot more really conviction-based founders, and I think this is a really important point, right? You're not starting a business for lifestyle. You're not starting a business necessarily to make immediately some cash, but you're following some sort of long-term vision that really takes a lot of faith and a lot of leaps and bounds, right? And a lot of hard work. And this is something I've seen more and more throughout my 1.5 years, kind of stopping into Barcelona and Madrid. But yeah.
So, I mean, you have an office in Berlin. You have another office in Tel Aviv.
Yes.
You don't have office yet in Paris or in France. You don't have office in London. Why did you
We do have an
choose-
office in London.
I have one. And eventually I expect to have more in all over Europe. So why did you choose Barcelona? What is interesting? What do you find interesting about the ecosystem here?
Yeah, I think if we were to generalize, right, and this is not to say it's a very black and white picture, when we look at like, for example, the Israeli ecosystem, it's fairly well known. There's kind of a brand for each ecosystem. And when we look at Tel Aviv, it was very much tech, deep tech, cybersecurity. When we look at Berlin or around Germany, it's these business models that are really operational and process, right? So e-commerce, there's a lot of that coming out of Germany. And this is a really process strength. In London and UK, it's a lot of fintech, right? And this is kind of, it makes a lot of sense kind of coming from like all the people going into startup and tech where they had their experience before their entrepreneurial life. And in Barcelona and around Spain, what we see is three really interesting elements. I think one is data, another is design, and general creativity on how to solve like business model challenges, right? So these three things I think are very, very distinct in my observations here. As software becomes easier and cheaper to build, what is really going to be the differentiator going forward is things like, are we building a product that not only solves a big challenge, solves a big, massive problem for a massive market, but is it a joy to use, right? And we were seeing this kind of these softer factors really becoming up and center when we're looking at some of the large companies coming out of around the world today.
No, so as you said, here in Spain, probably we are. I mean, I'm not saying that in all the other countries are not like product focused, but here in Spain, probably we are. I don't know if too much, but maybe it's good, too much product focus, right? So one of my questions is also related to being pre-revenue, right? Because there has been some controversy about just Buddy also raising 45 million without making any money, right? So why you decided to invest in a company that was pre-revenue? And then I have my own opinion, and we can discuss it. But why you decided to invest in
Yeah, I think Body is a prime example of what we're talking about here. I mean, conviction, right? I mean, you could have started another classifieds business, right? The problem is clear, the market is clear. We know a lot of different classifieds businesses out there, but you took an existing kind of what's out there, and then you started looking around the actual experience for the users, right? Things like, okay, when people cohabitate or live together, and you're looking for a spare room, things like trust is an incredibly important piece of that whole experience, right? And this is exactly the kind of challenges that I think actually in the case of Body, you guys did an incredibly amazing job kind of wrapping this all together in one super elegant, very easy to use product. And I think to be pre-revenue, I mean, there's kind of, you can think of venture capital and company building, right? Just two sides of the same coin. There's a lot of different risks that come along the way. And instead of going first for monetization, I think it's really important, right? Like you were very upfront with us when you were talking to us in the beginning, and all of your investors, like, look, we're just not going to focus on monetization now. There's things that in the product that we need to get like really nailed down first, right? Like the user experience, the onboarding of supply, really the fluidity of the marketplace. In absence of those things, the business model simply won't make sense, right? So, and given that you're a startup, you have limited resources, I think this kind of focus and the pushback also to your investors, you're getting a lot of pressure, right? And at some point you will need to focus on revenue. And I think you've thought about that already 2 years ago. But you were also very adamant in saying there's a step process here of risk mitigation.
Yeah, and that's one of the things that I like about all investors, one of them being Target Global, is that also this is something that in Spain probably we are more traditional. So here in Spain, and we were talking about product, right? We are finding new marketplaces that they try to disrupt an entire industry,
Yeah.
right? And when you talk about marketplaces, usually it's also classifieds related, right? So the model of the classifieds nowadays that hasn't changed in the last 10 years, it's basically finding the best business model they can have, right? By offering a poor user experience.
Mm-hmm.
So what we are trying to do is going to a huge market, which is the real estate market, right?
Yeah.
And saying we first going to focus on offering the best user experience,
Right.
and then once we have that, then focus on finding the best business model, which is completely different. Right?
Yes.
So this is something that I think venture capital funds like Target Global and that come, other venture capital funds that come from US, right? They also, it's easy for them to understand because they have seen it before.
Yes.
In Spain, we don't have that many Googles yet. So it's also hard to believe, which is something that I understand. But eventually, to happen, the first thing we need to do is to believe. So.
Yeah, I'd actually love to turn this question around on you, right? I mean, from an entrepreneur's perspective, do you think Spain is ready for the global stage? I mean, what are the key drivers that you're seeing now? Yeah.
So, I mean, for me, there are like probably 4 main drivers to eventually have a billion-dollar business, a successful business, which is global.
Mm-hmm.
The first one, it's always going to be like solve a huge problem, which is global, basically, not only local. The second one, it's about timings. I think Bali 20 years ago wouldn't work, basically. The third one, it's probably people. I think talent, it's everywhere, and in Spain we had talent 50 years ago, 100 years ago, and we still have talent. And not only in Spain, everywhere. But then, apart from talent, what is needed in order to go fast is experience. So when you mix experience coming from San Francisco, coming from London, coming from companies that they have already done what you want to do, and you mix it with talent, then eventually I think that's going to be key for success. And then the fourth one, it's money, basically, right? So in Spain, I think the 2 last points about talent is already here. What we are seeing is because we have more money from investors, we are also willing to and able to go outside Spain to bring that experience.
Yeah.
And then this just creates this mix between talent and experience is just great. And also it's about investment itself. So here in Spain, we have a few really good venture capital funds, but not too many.
Yeah.
And also usually are more focused on seed stage,
Yeah.
right? Not on growth. So it's great that, for example, right now we are seeing Target Global coming to Barcelona. And eventually, I mean, in our case, we have money. We have investors from US. We have Spark Capital with World. Also now Target Global. So I think this is something that we are starting to see, right?
Yeah. So what would you say is still needed, right? So if you were to speak to the founders and investors out there to really put Spain to get them to the next level, right? To get everyone here to the next
This was me interviewing you, not the other way.
I know. I'm curious, right?
Okay.
It's also interesting.
Yeah. So, basically, those 4 points are the most important points. I think what is needed, because talent is already here, good ideas are already here, it's more venture capital coming to Barcelona, coming to Spain, coming to Madrid. And yeah, so I think we are seeing some of that, but eventually we will need to kind of attract this investment from outside too. And then the venture capital that we have here in Spain, it needs to be probably, how I can say it without being too controversial, but probably less conservative. So one of the problems I think is that we really venture capital funds here in Spain, they don't believe they will find the next Google, so they try to keep it very local.
Yeah.
But I think this is changing already. So I think it's going to be needed, and then it's just a circle, right?
I totally agree with that sentiment. Also, I mean, I think thinking big, dreaming big, right? Really believing that it will happen. I think this is both from the capital side and the entrepreneur side. I think this is a prerequisite. Right? Yeah.
So you come to Barcelona, right? You are having this new office. What we can expect from Target Global?
Yeah, I mean, it's difficult to say right now what will happen in the future, but a few things that we definitely have in mind is, Target Global does investments between 1 and 5 million from the early stage and up to 35 million from growth. We also have a mobility fund that's a little bit more from A and B rounds. So we would love to see 1 to 3 core deals. Those are our core core investment ranges. So 1 to 3 core deals every year. And I would also say, because it's quite an early ecosystem, there needs to be way more push from risk capital. I would also love to do a few, handful of seed deals. I mean, we did an amazing, we made an investment in Mediquo, in Guillaume over there, 200K, a little over 200K, right? And these are really like the founders that have, a massive challenge in front of them. They have a big dream and they want to take a real product-driven approach to solving the solution, and it'll take time. And I think hopefully, we can collaborate, right, with a lot of the local VCs and a lot of other local entrepreneurs to kind of collectively get this engine really, really rolling, right? I would love to see in a couple years, stats around Spain, like there's a couple billions invested here, and there's more Bodies, Travel Perks, Globos, right, Wallopops, like all of these guys that, I would just love to see that being a more consistent kind of headliner on the international, on an international scale.
Great. So we have 1 more minute. I don't know if we should go for Q&A.
Yeah, I mean, if we have questions from the audience, that would be interesting. I mean, what do you guys think? I mean, maybe there's other investors also in the audience. What do you think?
No questions? If there's no questions, we can have 1 minute of nice music. I don't know.
Yeah.
Just kidding.
Yeah.
So,
Very cool. Thanks a lot, guys.
Thank you very much.
Anyone can ever met. And stuck on your eye. They never let me finish the song. Thank you. Simply the best. Well, talking about Simply the Best, they're coming now. Because now we're going to have a fireside chat amongst 2 of the most successful Spanish entrepreneurs in the world. Let's say that one of them at least is probably one of the most important CEOs, entrepreneurs in this South Summit. And the other one as well, let's say. Let me say, this is going to be a fireside chat between 2 companies, and the common word is disruption. One of them is Uber, and is disrupting the B2C market, or the industry, let's say. The other one is Affinity, and is disrupting the B2B artificial intelligence industry. But I was talking to them backstage, and then I was telling Uber, are you really disrupting the industry? Because according to Christensen's theory, Uber doesn't actually fit in the true definition of disruption. Why? Because the services that provides is a direct challenge to taxis, but it's a pre-existing market. And he says, interesting, I like it. I say, I'm going to give you some caña, as we say in Spanish, no? Caña, there's no translation. I'm going to give you a bit of, I says, yes, I like it. Well, Uber likes to fight for their rights. So here they are, the 2 of them, in a fireside chat to talk about how they truly disrupt their markets. And I'm sure we're up to a few surprises. From Uber, we have the founder, Oscar Salazar. And from Affinity, we have the CEO of Iberia and Latam, Alonso Aznar. Please, let's welcome Oscar and Alonso. Welcome. Welcome. You. I said it, but I said that you gave me permission to say that. Are you truly disrupting? Are you truly disrupting?
We are truly disrupting.
They believe they are. Let's hear it from them. Thank you.
Well, I don't think we are. It depends who you ask, right? If you ask the taxi drivers, then we're disruptive. I think disruptive is the word that losers use when somebody's eating, their pie. I prefer to use the word innovation. So you don't start a business saying, "Okay, I'm going to disrupt this." You start a business or a company because when you want to make it better, you want to make an industry better, you want to innovate. Disruption is an outcome, and it's mostly used by the people that are actually losing the battle. So is Uber disruptive? I don't know. You ask around. You're going to find that some people consider it disruptive, some people, doesn't, and it's all good. We agree to disagree.
Okay, so thank you very much. Wow, the turn up. Thanks to South Summit for having us. I'm sure all of you must be thinking, what is Affinity and what the hell is that guy doing sitting next to the co-founder of Uber? I'm thinking exactly the same as you, but hold that thought with me for a second and let me introduce you to my friend Oscar. Oscar, first and foremost, is a great person. He's a very smart guy.
Thank you.
He's an investor, he's an advisor, he's a technologist. He co-founded this small company called Uber, which is probably one of the most disruptive businesses we can say
Thank you.
ever created. And I think, everybody is willing to hear to you and listen to your story.
Well, thank you very much, Alonso, for having me here. The journey was pretty straightforward. Out of school, I went to school with Garrett, one of the founders. Pitched me the idea back in 2008, 2009. I joined the team. It was just Garrett and me. So it was much a team. I helped design the product and the technology. I was a founding CTO. Then between Travis, Garrett, and I, we launched the pilot in San Francisco. And the rest is history. I'm not longer, in the company. The company is a public company right now. What I decided to do is 2 years ago, I decided to leave New York, and now I'm based in Barcelona. I live in Spain. And I've been looking at different opportunities in the tech space, working with founders, understanding, the companies they're building. And it's interesting, to see how Spain is becoming, a more interesting place for technology companies. And that brought me to Alonso, which I met through a common friends, and I was very impressed about, his work in Affinity. We were talking, I remember the first time we met, and he told me about Affinity.
Tequila.
With a lot of tequila. So I remember a little bit of the conversation, but one of the things that I do remember is he mentioned that they were using AI, and when I hear the word AI, I say, well, this is bullshit, right? So that's just my gut feeling, because first of all, it's called machine learning, not artificial intelligence. Because I don't think it's that intelligent what we have right now. I think we have a long road, to walk, to truly achieve, computer-based intelligence or decision making. So I learned more about Affinity, and actually it's one of the few companies, in my opinion, that are actually leveraging machine learning for something interesting that actually makes sense in their industry. Because right now, the current environment is you have a startup, you just add machine learning or AI to your deck, and your valuation just went up, 10 million. So this is pretty much how machine learning is being used right now. So it's very refreshing, to see companies like Affinity leveraging, really machine learning to actually enhance and make processes better. So and I'm going to stop because here's the guy from Affinity. I think you should explain a little bit more about how Affinity actually is leveraging this technology.
Thank you. And it's true, we know how to use artificial intelligence. And by the way, who knows what artificial intelligence is? Who would know how to define artificial intelligence? No one? Okay, let me do an example. The founder of Affinity does this much better than I do, but just follow me for 1 second, okay? Okay, you got that? Can everyone stand up, please? Please? Can everyone stand up? This is AI.
Okay.
Stand up as well. Okay, let's all do it together, all right? 1, 2, 3. Not quite. Once again. Last one. Perfect. This is AI. This is the heart of AI, learning and converge. So at Affinity, we know how to use AI. I'm going to tell you the 4 key things that I believe makes Affinity unique in this space. First thing, we know how to use AI. So we are solving an issue with AI. We take data, we find patterns, We use those patterns to predict human behavior, and we use those predictions to optimize how big enterprises allocate resources and employees when it relates to their client. It could be in a call center, it could be in a chat, it could be in a store. And we work with the big enterprises in the world, telecom companies, banking, insurance, companies like AT&T, United Healthcare, or AXA. Second, we know how we can precisely measure the value we deliver to our clients. We can tell our clients precisely every incremental dollar we are delivering to them. This is key. And going back to Oscar's points, we keep seeing artificial intelligence companies that they cannot measure the value. There is no return attached to it. So if you're an investor, you are funding your startup, or you are trying to deploy artificial intelligence, please make sure you can measure the value. Otherwise, it makes no sense. You should move to the next thing. Last year at Affinity, we delivered over $1 billion in proven value to our clients. Third thing, our commercial proposal. I believe we have the most disruptive commercial proposal in the B2B market. With Affinity, there's no CapEx, there's no investment, there's no fixed fees, nothing. We just take a share of the incremental revenue we deliver to our clients. From a financial point of view, these are infinite returns. Just think about it for a second. With the same fixed cost base, we are generating fresh revenue. So let's pick an example of one of our clients. We are delivering to them $500 million in incremental annual revenue with a 60% gross margin. That is $300 million of cash generation. That is transformative to our clients. And fourth thing, and the most important thing, I truly believe we have one of the best tech teams ever put together. We are missing Oscar there. I hope he will join us soon. But we have some of the Affinity guys here. Don't hire them, but you should talk to them. And when it comes to people, you should spend time and you should spend money on it. Because a good idea with a bad team is gonna fail. A good team can achieve anything. And quoting a big US CEO, he told me the other day, look, Alonso, when it comes to hiring and replacing, it's better to have a hole than to have an asshole in the company. So, and that is totally true.
Yeah.
Those are the 4 key things why I believe Affinity is disruptive. We know how to use AI, we can measure it, there's a disruptive commercial proposal, and we have the best team. I think now you can join us, right?
Yeah. Yes. If I was running the company, I would join you.
But I think, enough about Affinity now. So, look, Oscar, you're an investor. So, where are you spending your time now, and what is the next big thing you see coming?
I would be lying if I tell you that I know what's the next big thing, because usually the next big thing, nobody sees it until it becomes a big thing, right? So, what I'm doing right now, I'm taking a different approach. We're entering, finally, there's a lot of capital that was created, just to fund startups and ideas and founders in the past 10 years. So we have created different categories. For example, Airbnb changed an industry. The ride sharing changed another industry. Artificial intelligence. So we're seeing a lot of movement, pretty much in the ecosystem. I'm taking a different approach. What I'm saying is, okay, I'm not going to invest in companies. I'm not going to follow trends, but I'm going to start looking at non-obvious sectors and areas instead of just jumping into the platform that everybody is doing, right? For example, I'm not doing ride sharing anymore. I'm already exposed to that sector. I'm not doing anything related to social media. I'm actually trying to see, okay, what are the big problems that the world has right now, and who's actually working on a solution for those problems. And I see 2 problems, or there's more, but I see 2. One is climate change. And everybody's complaining about climate change. And everybody's saying, okay, climate change is gonna kill all the humans on Earth, blah, blah. And they might be right. However, very few companies are actually doing something about it, and that's a big problem. And the climate is changing,
So there's a lot of companies that I'm actually taking a look right now. It's like, for example, just a very simple one in agriculture. How can you use technology to improve, agricultural techniques? Some countries that were actually cold right now are becoming more tropical. Therefore, there's new diseases, that are actually moving from country to another country. So who's actually working on finding these new solutions, for the new problems that are being created by this shift? The other sector that I see that I think is a big problem is, is technology itself. And I'm just going to give you an example. Would you give your car keys to your 7-year-old son or daughter? The answer is no. I mean, you're not crazy, right? However, you give them phones. You give them phones, you don't explain anything to them. You just give it to them. They have access to the internet. They have access to pornography. They have access to violence. They have access to all this misinformation that it's out there. And I think that's a problem. I think it's a problem because nobody's actually looking for solutions or even questioning, and I'm a technologist, don't get me wrong, the impact of the technology is having, on the society. So I'm actually looking into companies right now that are bringing solutions so humans, we can interact better with technology instead of technology being used, to shape the way we think and the way we actually act as a society. So for me, these are the two areas: is technology itself, and I think that's going to be the big wave. If you look at Silicon Valley, a lot of the big players are not letting their kids to use computers. A lot of the schools right now in the U.S. are actually banning phones. France just passed a screen-safe classroom freedom law. So there's obviously a problem. So coming back to your original question, it's like, what do I think is the big trend or the new wave? I don't know. I just see problems. I see. When we started Uber, I didn't see ride sharing is going to be the next big thing. I saw a big problem. Yeah. I lived in 5 countries, at that time, and I always had a problem getting a taxi. So I said, this is a big problem, right? So this is my approach to investing. I invest in companies or people that are actually trying to solve big problems.
So look, I think that makes a lot of sense, and I think we are wrongly facing some of the issues we have. When it comes to artificial intelligence, for example, we keep seeing people saying, "Oh my God, robots are gonna come. They're gonna take over the world. All this singularity stuff, and oh Lord, come and help us," which is just simply not gonna happen. When it comes to robots and artificial intelligence, if you put together all the computational power in the world, like every machine, every computer, every smartphone, it equals to the brain of one human, depending on the human, but the brain of one human. Yeah. And the algorithms behind it are far, far away from that. There's no way we can replicate, there is no evidence we can replicate emotions, we can replicate basic semantics, we can replicate visual recognition. So in reality, all this is that for Hollywood and for people that are trying to sell books. In reality, what we need to face is the revolution technologies we have in our hands, and how this is going to change the world from a politically, economic, and social point of view. And the massive GDP creation that is going to happen in the next few years, that is going to increase inequality. We need to solve this, and we need to have social responsibility as a society to find mechanisms to be more inclusive with people. So we need, first of all, to invest in education. And as you were saying, we need to be solving real problems. Otherwise, it makes no sense what we are doing.
Absolutely, you're 100% right. And when people ask me, in these kind of panels, are you afraid of artificial intelligence? I said, I'm more afraid of human stupidity.
Exactly. Artificial intelligence is a set of tools, to be more efficient in a very narrow activities. It's just it.
Yeah, and just like a very, very simple, example. A computer doesn't know the difference between papa, and papa. 3 different words in Spanish, 3 different meanings. You tell that to a computer, cannot figure out the difference between them. So it's not that smart. So it's far from intelligent.
Yeah.
So
I think we need to be way more real. I think. Should we open it for the last minute for you?
Yeah, last minute. Any question?
Anyone has a question?
Just one.
We would love to answer a question.
She's right there.
Could you repeat the question?
No, I can repeat it.
Yes, but for the...
No, I can repeat what she said.
Okay, thank you, but still.
So basically, my question is for you, Alonso Andar from Affinity. You've said you're a B2B company, and you said you work with big companies. So how do you do to actually enter these large corporates and bring them your AI?
Okay, that's a great question. Do you have 1 minute to finish?
You don't, actually, but there you go.
Okay.
What can I say?
I will answer quick. So I would say 2 components into that very quickly. First of all, when it comes to innovation and when it comes to new technologies, unless you have like a top management support in those big enterprises, nothing really happens. Because there is a lot of key stakeholders to align, and these companies move slow. So you need the right stakeholder to move things. And the second component into that, and to be honest, this is one of the things that drives me nuts, they need to understand that the technology companies, we are not consultants selling AI. Because what typically happens, the partner of you pick a large consulting company, we'll go and see, you pick the CEO of a large enterprise, they have been working a lot together, and they will say, hey, you need to get into AI. AI is the future. And Mr. CEO, who doesn't really know what AI is, he's going to say, yeah, okay, let's go big in AI. This is amazing. So, they will launch an initiative, they will budget $100 million, they will hire a bunch of consultants, they will produce thousands of slides saying transformative and strategic. And a few years later, nothing really happens. Like, no return, no economic value, the consultants will get a few $1 million, everybody's happy, and they will move to the next thing. And let's go back to the key thing. We believe that artificial intelligence is required to be solving a concrete issue, and it's required to be measurable. And I have nothing against consultants.
Thank you for coming.
That is just guys.
Thank you very much.
No.
Sorry?
Well,
Sorry?
Are we going to get
Momento. Sorry, I have to jump the protocolo, so I come back. I have a final question.
Yes.
For both of you. Just answer yes or no. Do you like magic?
Yes.
We do like magic. Let me tell you one thing. The most important thing about the presentation, when you see a guy dressed like that, he's the rich founder, I'm the employee.
The question was, do you like magic?
We love magic.
Do you guys like magic? Well, if you do, I suggest you don't move from your seats and that you guys join us at the French row, because what you're about to see has never been done in South Summit before. Y ahí lo dejo. Round of applause for Oscar and Alonso. Da, 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 da. Thank you. What you're about to see is never seen before. I didn't mean my silly walk, okay? Join us, please, because this is not any usual keynote, my friends. It's entitled The Magic Behind Technology for a Reason. So join us at the front. Let me tell you a little story. I'm sure this has happened to you as well. When I was a little girl, like a couple of years ago, I tried to open the TV set. For the millennials, the TV set in the old times was a big box, like big box. And I tried to open to find the little people inside of it, because I wanted to see the people that I saw on the screen. I didn't know that they weren't actually there. I didn't know how TV worked. When my parents told me that, they weren't actually in the box, I thought, well, this must be magic, right? Because this is what happens with technology when we don't understand it. Isn't it? Isn't it? Okay. Well, it's not true. Magic doesn't exist. Or does it? To prove us wrong or right, we have prepared a most intriguing fireside chat. Quite disruptive and original. We have to say all these words. There's two colleagues from the same company. One of them is the Chief Innovation Officer at Telefónica. The other one is the Scouter and Deal Flow Manager at Wayra, which is Telefónica's Innovation Hub. If you didn't know, I don't know where you've been doing, where have you been hiding the past months, years. And they have to come to talk to us about the magic behind technology. But beware, because not everything that you're going to see, it's real. Or is it? Nothing seems the way it looks. Please, let's welcome Gonzalo Martín Villa and Carlos Ruiz Sánchez. Woo! Welcome. Yes, you can throw stuff at them. Ideally, not tomatoes. Or not yet.
Not tomatoes.
Not tomatoes, or tomatoes.
Wow. Ay, pues nada. Aquí estamos.
Very good.
Well, I want to start saying one sentence that Paloma helped me to introduce this talk, which is Arthur C. Clarke said, if technology is advanced enough, it's indistinguished from magic. Thank you so much, Gonzalo, for joining us this morning.
Thank you very much. I must admit that I am a bit scared.
Yes, me too.
There was also, I talked to my team that you were going to do magic with me, and people were asking you to make me disappear forever. But I hope that is not going to happen.
No, espero que no.
Okay.
Más que nada por mantener mi puesto. Gonzalo is the chief... bueno, ya te lo ha dicho Elena. Lo conocéis, el jefazo. Dicho esto, I would like to start asking you one thing, because we are going to talk about innovation, about some projects Telefónica has.
Yep.
So I want to start asking you a very important thing. And it's the following one. Do you continue using Post-its in your innovation ideas? Like, I don't know, design sprints, or maybe you use Post-its just to make your office look cooler?
Yeah.
People use them. The startups said, wow, we are very cool, and the wall is full of Post-its.
We do. I think if you work in innovation, you always need to have that, no? It looks good, looks sexy, to use Post-its and all these kinds of things, no? But in Telefónica, you have to go a little bit further, no? And what we do is what we call the lean elephant methodology, no? Telefónica is a very big company. Sometimes people compare us to an elephant, no? I'm probably kind of right, no? But this elephant can run and can dance, no? As our chairman says, no? So we have adapted many of the things we learned in Wayra. Wayra was not only about investing and helping other companies, it was also about transforming ourselves, no? So we decided to use a lot of methodology that the startups use to internal projects, no? So many internal projects that I also manage in Telefónica, the internal people, the engineers that we have in Telefónica.
So sometimes you use Post-its?
Of course,
okay.
But just to look cool, okay?
Soluciona la pregunta. Vale.
Okay.
Well, I want to say one thing, because we are going to talk about magic, about innovation, about technology, and I want to say a very important thing. Well, the deck of cards, you know, 52 cards, la famosa baraja francesa. Post-its are very dangerous. Vale, ahí. Are very dangerous because of the next thing. Sometimes we use them to remember something, just to write some ideas. For example, if you have this card, I want to remember this card, but I remember it because I'm watching it, okay? The True of Hearts. But if I turn it, I can't remember which card is. But that's why we have the Post-its.
Okay.
So please take one of them. Perfect. And stick it on the card. And we are going to put the 2 of hearts. And it's very good because now you can see, you don't see the face, but you remember the guy.
Okay.
But there is a big but. Be careful with deposits. Very careful.
Okay.
Okay. Because if you remove that post-it, sometimes you forget the card.
Okay.
You know what I mean?
Okay.
Okay. More or less.
I didn't see that.
Okay. So you should be very careful with that kind of card. But ¿qué tengo que decirte ahora? Okay. Well, we used to play with these cards. There are 52 cards, 2 jokers, 2 comodines, and 1 publicity card.
Okay.
And from the 2 cards I named, the jokers, the comodines, the joker is one of the most important cards in the deck because it can change a game. A joker can help you win a game.
Yeah.
So it's certainly the differentiator of this deck, of these 52 cards. What is, you have any differentiator card, you have any joker project in Telefónica you're working on?
I knew you were going to ask me this question, so we have many differentiators, but I would like to talk about one that is very important for us right now. It's a project that we call Internet para Todos, which is a beautiful project. No? Right now there is a huge digital divide in Latin America. We have more than 100 million people that don't have access to mobile connectivity, mobile internet. So this is a great challenge, and it's a great responsibility for companies like Telefónica to provide that connectivity. So that's probably one of the... We have many projects, again, but this is one of the ones that we believe it's a differentiator for the future.
I just collect some of those jokers, and I'm going to show you them, because with these jokers, I'm going to play a game, a very good game.
These jokers are white?
No. This is a white card.
Okay.
I'm going to put it here. I don't know the... Okay, more or less, you can see it. The white card. And we are going to play with 4 jokers.
Okay.
And they are going to start doing maybe strange things. Okay? So, estoy viendo para dónde. Ahí. Perfect. So, close-up magic, check this out. First joker, 1, 2, 3, 1 turn around. It's good.
Okay.
Second, 1, 2, 3, 4 jokers.
That was
bueno,
good. That was good.
But the next one is the best one and the most difficult one. Bueno, se me ayuda un poquito.
Okay.
I use my ability with the cards. But look, the last one is the best one. That's it.
Okay. That was good.
The 4 jokers
Applause.
turn around.
Applause.
Come on. But I forgot one thing. What day is today?
3rd of October.
Oh, yeah. Fuck. Oh, vaya. Today is Joker Strike.
Okay.
You know what's Joker Strike?
Well, I believe it's when they don't want to work,
I mean, the Jokers sometimes disappear. So I think it's Joker Strike. But it means in the white card, it's the Joker Strike. Yes, of course. Está muy bueno, ¿eh? Este juego.
Está bueno.
Bueno, sí, es un juego. It's a very good one. Sí. Okay. Bueno, tampoco te vengas arriba. I know sometimes in these projects are some barriers to go to that strange places,
yes,
to that very far places. So what barriers or what, I don't know, difficulties you found in this project to develop it?
Many. In Internet para Todos we have found many, no? But probably the first one is the easiest to understand. No, we're talking about places that are very remote, that access to those places is very difficult. No,
So it's very difficult to bring the infrastructure there. There is no electricity. So those are two great barriers. No, it's true that also the people that we reach there don't have many times lots of digital abilities. No, so also we have to. There is a part of education there that we have to train people how to use mobile internet. So many things that are very difficult. No, we went there some months ago, and it takes a long time to get there. And when we went to the inauguration, it was like 4 hours in very difficult places, 4,000 meters up in the mountains. So it's a very complicated place to deploy infrastructure. No?
And you have any kind of trick to work on that project?
Well, first of all, we do it through innovation. No? That's what we do. No? And we have to innovate, but not innovate only just in how to bring, we have to do that, no? How to bring the infrastructure and the antennas and everything. Basically, deploy a network, we have to do it in the whole value chain of a telco, no? We have to do it in how we do the marketing, how we operate the network, how to deploy it, also how to find better or more cheap infrastructure, use artificial intelligence, of course, in terms of where and how to deploy and what type of equipment we have to deliver there. No? So we have some leverage there.
Sometimes we say when manipulation, when a human can reach something, that's why a magician has the magic. So I want to show you a game with a deck of cards. I'm going to try to do something very cool. It doesn't mean anything, but pero me queda más a gusto. But I want you to say stop wherever you want. We're going to find a card, and I don't want to guess the card because I have something which is going to help me if I find it.
Okay.
It's a wire. Okay. So I'm going to put it here, and please say stop wherever you want.
Stop.
Pero mejor en el medio. Si no, no podemos elegir. Venga.
Stop.
Vale. Which one would you like me to guess? This one or the next one?
Of course, this one.
For me, it's better this.
Oh, I know that.
The 10 of...
I'm trying to put it harder.
Did you imagine?
Yes.
What a good magician. Please take this card and show it to the audience. I don't want to see it. You got it?
Yeah.
Okay, so please put it in the middle of the deck.
There?
Yeah.
Okay.
That's it. And I need to find your card, or at least to guess which was your card. Esto no sirve para nada, pero pone a la gente muy nerviosa. Okay. Well, I didn't see the card, but the wire watching.
Oh,
yeah,
okay.
was watching the wire. So that's why I have something here. So I want you to take the wire here. Sí, con los deditos. Perfecto. Check this.
¿Puedo quemar?
Venga, sí, bueno, ten cuidado. No pasa nada. Look. Está flipando, ¿eh?
Sí.
Look, I don't know if you see something similar.
Yes.
I don't know if you see something. I'm going to put it here.
Can you see this?
Like this. A ver, se pone. Ahí está. Yes? Is the Eight of Hearts? Yes?
Eight of Hearts.
Bueno.
I must confess that I thought you were an amateur, but I think you're a pro.
I told you I'm the fucking master.
I wonder how much time you devote to magic instead of Waira. Because you're good.
Okay, well, maybe we can talk it later.
Okay.
But in this project, to continue following about Internet para Todos, you have 4 different ways, or you have the 4 aces of this project. For example, in Magic, we have the 4 aces, the 4 most important cards in the deck. So I'm going to show you them. And I'm going to try to find them. The first thing is very important to shuffle the deck. Porque si no shuffle, parece que está. Entonces, the first one is just cutting something like this. Like this, and appears.
Okay.
First one. Okay, let's go to the second one. I'm going to shuffle it, something like that. And I don't want to move from one hand to another. Yeah, second one.
Good.
Está flipando, eh? The next one, I have the two red aces,
Okay.
but look. Third one. And the last one. One, two, three. So, what are those 4 aces the project has?
Well, I think as I was talking before, I think is innovation for sure, planification, investment, but if in a different investment, because we need to find different equipment, working with startups, and this what means is a different operating model. So those
Good.
are the 4 aces that we have in the project.
Well, you discover, or you talk about Intríngulis, this project. I don't know, you know how to translate Intríngulis?
Intríngulis, no.
Intríngulis.
Intríngulis.
Okay, but I want to explain you one of the most important things, un secret of magic, which is called misdirection. The misdirection is the way a magician makes you watch or see to one place, meanwhile you are doing the secret in the other. So, for example, I want to show you with the 4 aces. Sometimes when you take them, the ace of diamonds, spades, clubs, and hearts, you make this misdirection, and it's 1 second. And it's 1 second because sometimes it's white, a number. So they change. No sé si lo encontráis muy normal esto, pero.
Ha flipado.
But I have those 4 aces changed in these cards. I don't know if you can tell us what these numbers mean or something.
Well, probably this number 700,000 is the people that we have reached with this technology. People that were not connected to mobile internet in Peru now, because we started in Peru. So this is the number of people that are now connected by our technology. It's a lot, which brings a lot of opportunity, and this means wealth for those communities. So we're very proud of this.
Perfect. Well, and just to finish, because time is up desde hace un rato, I want to take a picture of this moment.
Okay.
It's just mixing technology and magic, so you can take a selfie. We are going to take a selfie, un poco de luz en la sala para ver que está petado. Lo hemos petado, Gonzalo.
Así, hacia atrás.
Gonzalo, pero que lo hemos petado, mira.
Sí, ¿no?
Pero un momento, ya está. Mira la gente de allí, es que está... Mamá, es que sé que está por ahí. Mamá, ¿qué tal? Siempre quería hacer eso. Ahí estás ahí, mamá, ¿qué tal? No, pero un momento, venga. Let's do it. Okay, so... No, but... Okay, no. But... Look, but... Put your hands up. Put your hands up. Oh, perfect. Okay, and this is... misdirection.
Está bien.
Maestro.
Muy bien,
I've come up on stage to ask you a favor, because these guys have taken far more than their allocated time, and they know it. I know it's
But
lunchtime.
it was worth it.
It is worth it. It was worth it.
we
It's
hope.
lunchtime. We have a full house. And now, for the last keynote before lunch, I would ask you all to stay, because now we're going to have a technological company that actually does magic. Because do you know when you sing to your phone and it immediately recognizes the song? Who are they?
Shazam!
Well, stay for real magic because we have Chris Barton, the founder of Shazam. Come on, please, stay with us. Bueno, me llevo yo una. Don't go, don't go. Lunch can wait. This is the keynote of the morning. Because Shazam is magic. It is real magic, not like these Wira people, this Telefonica. Apple believes in magic and acquired Shazam for suppose we think, they say, we don't know, around $400 million in 2017. But it wasn't done overnight. It took 17 years for them to be profitable. So we're going to hear directly from one of the founders, how did they do it, what the magic is all about. Please, let's welcome Chris Barton. I'll try to...
Thank you. I would try to Shazam that, but live music doesn't work, unfortunately. So I thought one thing I like to talk about is the story of Shazam, and in terms of from the perspective, or it's really tailored for all those very early stage entrepreneurs. Because as an early stage entrepreneur, you're tackling such difficult things and challenges in your business, and we definitely had to do that with Shazam. So I think there's some good inspirational stories. Oh, I thought I'd start off with a good song, by the way. Does anyone know what this is? Can we turn the volume up a little bit? Anyone recognize it? Wow, see, that's why you need Shazam, I guess. Oh yeah, you're going to figure it out. Does it say? Uh-oh. Shazam can't get it. You got it? Busy Child. All right, that by Crystal Method, yeah. I love that song. So in the last few years, there was a point where we were analyzing all the different features of Shazam and trying to understand, what is it that drives the new users that we get each month. So Shazam gets about 8 million downloads per month and has well north of 150 million monthly active users. And we're trying to understand what keeps these people coming back. What is the thing that really, what is that magic? And big surprise, the answer is identifying songs. And pretty much nothing else. It was all about identifying songs. And Shazam raised $140 million, and see if you can guess how much of that $140 million we used to invent that feature. Well, the answer is $0. So because we invented that feature before we raised even a seed round from angel investors, it was when we were bootstrapping and had zero cash, and we invented that technology with zero money. And I think that says a lot to early stage entrepreneurs of how much value you can create in that very early stage, and how it's not necessarily that the answer is if you can just raise $10 million, $20 million, $30 million, but it's more about really focusing on what is that unique innovation that's going to really be the core of driving your business. So there's one thing when we were raising money, one venture capitalist said that really resonated with me. He said, we showed him the Shazam demo, and he said, I don't see why anyone would ever use this. And that became a very motivational thing for me, because I really wanted to show that people would use this. So a little bit about the story. Before Shazam, I used to always hear songs in my daily life, and it could be anywhere, in a cafe, a bar, a club, at a friend's house, watching TV, and I would write down songs that I liked. And I would ask people, ask friends, do you know what this is? And I would add it to my list and maintain my list of songs my favorite songs. And that was really the inception for coming up with the idea for Shazam, because I really needed some tool, something where I could just identify the song. And so I thought, wow, what if you could do that? What if you could just hold a mobile phone up in the air and it would identify the song? That would be amazing. And so the concept of Shazam was created. And the name Shazam actually means to conjure magic. Because what else are you doing when you hold your phone in the air and it's like magic? The answer comes right to your phone. And magic became a core part of the theme of Shazam, being a magical experience for users. So the concept, we believed, was much broader than to simply identify songs. We believed in this concept of the music moment. And the music moment was a moment in one of these places, cafes, bars, clubs, watching TV, theaters, retail stores, anywhere you heard music, and then once in a while you hear a song that really moved you, that really grabbed you. And so that was a music moment for you. And at that point, you would use Shazam to identify a song, but then we would be the entry point into everything you want to do with music. That was our vision. So that could mean you want to see the album cover art. You want to see the other songs on the album. You want to see the discography or the biography of the artist. You want to share that song with a friend. You want to add that song to a playlist, and so on and so on. So just anything you want to do with that song that really grabbed you, that really resonated with you, Shazam would be the search engine that was the entry point into that experience, and that was our vision. But it turned out, as many of you early stage entrepreneurs know, that building this business is so much harder than you might think. We faced many challenges along the way. And the first challenge we faced was that it was impossible. Because we went out and we spoke to all of the experts that would have a specialty in technology that could identify music. These people were professors and PhDs out of some of the top programs in the US, MIT Media Lab and Stanford Center for Research in Music and Acoustics. And we went to them, their PhDs in electrical engineering with a focus on digital signal processing, and some of them specialized within that in audio signal processing, and some of them specialized within that in music-related audio signal processing. And we said, this is what we want to do, but they said, it's impossible, because noise and scale. We were going to try to listen to music with ambient sound and ambient noise, and we were going to try to identify against a massive database of songs. And the combination of those two things, they had no idea how to implement this technology at the time. But we finally found a professor at Stanford who said, although he doesn't know of any technology that can do this, nor does he know how to do it, we showed him, or we made him an advisor to the company, and then we showed him our list of people that we were thinking of recruiting as the inventor, the fourth co-founder of Shazam. And our original list was about 30 names, all who had PhDs in electrical engineering, audio signal processing, focused on music at places like MIT and Stanford. And we said to him, can you please rank the 5 smartest guys? Because we want to approach them and recruit them as a co-founder of Shazam. And so we recruited Avery Wang, the number 1 on that list, 4 degrees from Stanford in mathematics and electrical engineering, statistics, and he became our co-founder to help see if he could invent this technology, working with the professor. But the next problem was that he thought it was impossible. And it was very hard to motivate and to try to conquer this problem. And you can see some of the challenges that we faced. So not only I mentioned the noise in the background, but also you have speaker quality, poor speakers. You have noise cancellation technologies, such as the technologies that basically are built into phones that emphasize the human voice and de-emphasize all other sounds, including music. Voice compression technologies that reduce the quality of the sound over mobile phones. Speed variation, which is DJs changing the speed as they play music on their vinyl records. And then, of course, when they use digital methods for DJing, they can also do pitch correction, which allows them to speed up the music without it sounding like the Chipmunks. And reverberation, such as you get in large rooms like this. And then all the computational and scaling challenges of statistically scaling and being able to robustly identify a song. So I'm going to play a little 15-second clip of a song for you right now. And now what I'm going to do is play that exact same 15 seconds of the exact same song as recorded in an ambient environment with people. This is what Shazam hears. We were very nervous. Because how are we going to conquer this problem? And even these genius PhDs didn't know how. But then one day, after working on it for months and months, we cracked the code. Avery and Julius came up with an innovation that they believed would really solve this problem. And they called it a spectrogram, which is a three-dimensional graph of frequency, time, and energy peaks, known as spectral peaks. And it was a map. We mapped every single song with this technology so that we could robustly compare and do pattern recognition technology, essentially an early version of artificial intelligence. And we built it in a way where we could scale it. For those of you that are highly technical, we searched the feature space rather than the time space. And we did combinatorial hashing to reduce the data set. So we did lots of tricks running an indexed search so that we could search across all music in tiny fractions of a second. But another problem we faced is just how far ahead of our time we were. Because Shazam was started in the year 2000, which is a year before the iPod and iTunes, and there was no market for digital music. So the types of things that we envisioned people doing with Shazam just didn't exist. And of course, we're way ahead of the iPhone, 7 years ahead. So all the things I talked about that we were going to do, that iPhones enable, like graphical user interface, showing album covers, not possible at the time. Streaming music, not possible. Downloading the song, not possible. Seeing the album cover, the discography, the biography of the artist, sharing it with a friend, all not possible because these things became possible with apps, and it just wasn't feasible for us for many, many years. And of course, there's the actual distribution, getting to users. And without an app store, how are people going to find out about Shazam? And so this was the most popular phone, I think it's the Nokia 3310, in the year that Shazam launched in 2002. And when Shazam launched, it was available on every phone, because the way you used Shazam is you dialed a phone number. It was actually a 4-digit phone number. 2580, the only 4-digit number on the phone that's in a straight line. and you would dial that number, hold your phone up into the air for about 15 seconds, and then a text message would come back to your phone with the name of the song. So that was Shazam. We, of course, had to build a cluster search engine, which is like basically the same thing that Google had built. Google was started just 2 years before us, and we had heard that they were building this sort of parallel processing Beowulf cluster with an index search capability. And so we also had to build the same thing from scratch, architecting both the hardware and the software that ran the search, because all the fingerprints of music would be stored in the RAM of many parallel processing PCs. This is the type of thing that a startup today would just simply outsource to Amazon Web Services, but there was no opportunity like that at the time. And then, of course, we needed the music, and we didn't have the music. We didn't have a big digital repository of all the music in the world. And there was no way we could find to get a hold of this. Back then, people just had music on CDs. So we did the obvious thing. We hired about 25 18-year-olds to work in 3 8-hour shifts, 24 hours a day, putting CDs into computers, taking the fingerprints of each song, typing the name of every song, the name of every artist, the name of every album into the computer, into software that we had built from scratch, and then creating our own database of fingerprints. And to give you an idea of how much music we launched with, if you had walked into the largest record store in the UK, where our first market at the time, and bought one of every single CD, you would have 15,000 CDs, or about 300,000 songs. We launched with 100,000 CDs, or 1.7 million songs at launch. So it was a lot of music. And today it's well over 40 or 50 million songs. But then the reality was that all our visions for having thousands and then millions and then tens of millions, hundreds of millions of users didn't happen, because it was very hard to get people to be aware of this service, dialing a phone number and getting a text message. It's very hard to get the word out. And so we struggled, and we burned up our cash, and we had multiple rounds of layoffs, and we barely survived, and multiple down rounds with venture capital firms, and barely survived from the year that we launched in 2002 to the hockey stick of growth in 2008 when the App Store launched. So for a period of 6 years, the company barely survived, almost closed its doors several times, until, of course, 2008 happened, and the App Store launched, and Shazam became an instant hit and has always remained one of the top apps downloaded since then, and achieved more than 1 billion downloads as of a couple years ago, north of 150 million monthly active users. And I have to admit, I did reach back out to that venture capitalist. And I wrote him an email. First, I had to find him on Google, of course. He had moved companies. And I said, it turns out people will use this. And he actually came and had lunch with me, and we had a good laugh about how hard it is to predict what's going to be big and what's not. So just 2 lessons from what we learned. One is that I'm a strong believer in the importance of simplicity, but the best simplicity, in my opinion, is the simplicity, not the kind that people typically think of, oh, let's have a very simple interface and let's make things easy to navigate. I mean, that's great, but the really amazing simplicity that I love as an entrepreneur is when you create something that's simple, but behind it is very hard technology to make it so simple. So, I mean, Google is a great example of just a little box. You type in what you want and you get the answer. And of course, what's behind that is incredible. Or at Dropbox, these are two companies where I worked. You know, you put a file into a folder and it just synchronizes. It's just in the cloud. Again, what's behind that incredibly difficult technology? When you can apply innovative and very difficult technology to create an incredibly simple experience for the user, that can be really magical. And one more lesson from my experience is the greatest thing, the pleasure in life is to doing what people say you cannot do. And there were so many people that said, we cannot do this along the way. So I thought I'd just finish up with just showing you an inspirational television advertisement from a long time ago. It's actually an ad, by coincidence, it's something that I've shown for a few years because I've always loved it. And of course now Shazam's been acquired by Apple, but it is an Apple TV commercial. And I think it's very inspiring for all the folks that are trying to change the world. And really that's what entrepreneurs are doing. They're often questioned and doubted, but they're trying to change the world. And that's really what this TV commercial is about. Not just entrepreneurs, but people who are trying to change the world.
Here's to the crazy ones, the misfits, the rebels, the troublemakers, the round pegs in the square holes, the ones who see things differently. They're not fond of rules, and they have no respect for the status quo. You can quote them, disagree with them, glorify or vilify them. About the only thing you can't do is ignore them, because they change things. They push the human race forward. While some may see them as the crazy ones, we see genius. Because the people who are crazy enough to think they can change the world are the ones who do.
Thank you very much.
Stay. I was just going to say thank you to Chris. You can tell a good speaker when a full house like this at lunchtime, with a full house like this at lunchtime in Spain. Thank you, Chris Barton. And now it's time for lunch.
Thank you. Enjoy lunch.
Thank you. Thank you. One more thing, bands, before you continue with the music. I want to say thank you to everybody. Yes, go for lunch, but I won't be on this stage today. I'll be on Enlighted. This stage will keep running today at 3:30, I believe. Before I go, although I'm going to be around in South Summit, I want to thank the technicians, the technical team at the back and backstage, audio, video. There's no magic on stage without technicians. I want to thank the band, Ruben, Victor, and Alex. What a difference. And I want to thank all the volunteers in South Summit. Enjoy lunch. See you later. Thank you.
Camina despacito, que las prisas no son buenas. En su brazo dobladita, con cuidado la chaqueta. Luego pasa por la calle donde los chavales juegan. Él también quiso ser niño, pero le pilló la guerra. Soldadito marinero, conociste a una sirena. Meses que dicen te quiero si ven la cartera llena. Escogiste a la más guapa, a la menos buena. cómo ha venido, te ha cogido en la tormenta. Él quería cruzar los mares y olvidar a su sirena. La verdad no fue difícil cuando conocí a Mariela, que tenía los ojos verdes y un negocio entre las piernas. Hay que ver qué puntería no te arrimas a una buena. Soldadito marinero, conociste a una sirena, de esas que dicen te quiero si ven la cartera llena. Escogiste a la más guapa y a la menos buena, sin saber cómo ha venido, te ha cogido la tormenta.